I don't think anybody can fairly argue that NVIDIA has placed itself at the center of the entire AI infrastructure build out. There's a chart out of a Bloomberg story today that I think exemplifies exactly what I'm talking about here. All right, of course, I highlighted in the middle for you NVIDIA. Okay, so with that being said, there are two things that are very important here about NVIDIA. Rod Dubitsky, number one, has just issued a story on his Substack page today, publication. I'll link it in the description below. And he says, will Moody's AI debt warning trigger an AI bubble crash? Last week, Moody's came out and warned about the debt. That's the first thing. The second thing is the credit default swaps on NVIDIA have spiked almost twofold in the last week. I'm going to explain why. I'm going to explain what that means. Listen. But firstly, let me explain quickly what Rod says. Last week, Moody's published an article with a blockbuster warning about the AI debt bubble. Also, last week, he said, I said this during a YouTube interview, and that was the interview he did with us on the channel. Go back and look at it. So he says, before the ink dried on Moody's article, news came out that NVIDIA is in talks to guarantee a $250 billion OpenAI debt, or debt of OpenAI. Moody's, this is what Rod says. These are his words in his article today. Moody's should put their words into action and immediately put their NVIDIA AA rating on review for downgrade. He says, while NVIDIA is large, they aren't big enough to provide a $250 billion guarantee without impacting their ratings. He says, will Moody's take action?
Having an
words
impact
are good,
on.
action is better. And what he says overall about this AI debt spend is, will Moody's effectively shut off or curtail new AI debt issuance via issuing private ratings warning directly to the company, or a public debt warning,
right.
Massive new.
Too boring, but that's important stuff. This what they call circular financing and all this, it's the my experience is my experience is it's usually not what everybody talks to you about that gets the markets in trouble, but these kind of things, the private credit shops, and they're putting all of this debt to build the data centers in through these wrappers around insurance, so that the guys running Apollo or the guys running BlackRock or the rest, they don't lose their wealth. But American retirees are going to be locked up for 10 or 15 years with essentially a savings account that may or may not work. And the problem is, obvious. People are going to lose money. But I'm not sure this is going to be the trigger for a sell-off. We'll find out, of course. I hope not. September, October are the really scary months for corrections. That's coming up. But I tend to agree with Mr. Lee that, in fact, this is just a correction in a bull market. And I tend to think we're going up. But I'm not going to talk about the war in the Middle East today. I don't want to get frustrated by all that. I guess Netanyahu was here today. He must have had another 10 suitcases of dirty laundry to get cleaned at the American taxpayers' expense. Today, everything is down in a massive way. Everything is red. Railtown's not massive, but everything's red. I don't know. Railtown is 2344, down 0.0017. Finger is down 0.0028 at 2675. So I guess that's not massive either. It's just looking at all the red screens. There's a stock that I've been following I haven't told you about because I wasn't given permission. It's way down. I think all of you, and me too, if we just hadn't heard some of the advice we had heard. GDC's down 20 cents at 161. Hey, they did a massive reverse and now they're driving it under $1 again. I've been studying this next trip, Mmtlp. It's down 6 cents. They're 165. They did a financing with the Lynn Partners. So, of course, in my opinion, that stock's headed to one, around one, whatever the story is. But I studied Lynn Partners in the United States. I might show it to you, but I hate talking about them. But they funded 19 deals in the U.S. That I saw or could find. They say they've done 200 deals. A lot of them were in Australia and the UK. But I did see 3 companies got out of their grasp and did very well. So I think the key is what the company's doing and if they understand what they're doing. But man, it's just such a state of our market that if you need to get capital quickly, you have to go swipe your credit card at Lynn Partners. Those are some, I think Shakespeare might have written about Lynn Partners in The Merchant of Venice. It's been around a long time. The greed and the control and it's been around a long time. All right, you guys haven't said much. Let me look at what you're saying. I just listened to the space call that Jack and Robin had, and they did a good job. Junk Savvy was on it. And 100% Danny, and he's very smart. And I was trying to ask some questions to learn. And, I got shut down at one point. Hey, let's just get back on the topic of the press release. And fair enough, it was the gentleman's call. It was his space call, not mine. So fair enough. But I 100% used a term that I hadn't heard before. You can make synthetic shares, but what did he call it? Something like synthetic delivery or synthetic settlement or synthetic closing. I think it was synthetic delivery. And what a concept. They can create a piece of paper. See, what you got to do is create something that both acknowledges, I guess, ownership and maybe some benefit, but really it places where the liability is. And you pass that around like a hot potato. And so here's the thought, and I didn't get a chance. I'd love to talk to 100% directly because I got cut off. I couldn't pursue the question. And, people wanted to know why there's, 5 Morgan Stanleys listed on the NextBridge Holdings. And my opinion, I didn't fill out my point of view because I didn't want to talk. It's not my venue. But I think what they do is they set it up. What Robin came on and said, I think it was Robin saying that it's, your IRAs, your cash accounts, maybe your institutions. I think she's right about that. Different pools of money. But I also think at these bigger firms, and I don't know if Torchlight or any of those guys were in them, but I think ETFs have been created by firms so they can buy shares and then they can start that whole game. But it's not just ETFs. It's the house positions, which are less so now because that's all been given over to the prime broker, and all of the trading desks, the risk arb they used to call it, has all gone to hedge funds. But I would imagine there's still some done. Those desks just left and became hedge funds. I would imagine there's still some done inside of firms. And that's where you get the stock to hypothecate. I saw Lansdowne there. I wanted to ask about that, but I got cut off and I didn't. It made me conscious that I didn't want to hog it. But I can't believe a company as well respected as Lansdowne is in this stock. Can't believe it. They're one of the premier London-based financial pools. A friend of mine had their account, and so a couple of times I was invited to small, quick informal gatherings, but it's a good firm. But we can go through that. I think there's a lot there on what NextBridge just did today, and many of you may not own MMTLP, but it's a lot to learn, and it's the situation. It's both the situation we're in, the whole year in, the situation we're in, which is our escape and why our situation is different. But it's also, it's a rigged game. And I really think that the change has to come with a policy change, But the great thing about MMTLP, I think there's one piece of luck, I guess. It's also what has punished everybody. It's why everybody's lost money in it, but it stopped trading. And I think that's very fortuitous for discovering what's going on here. I think the CEO of NextBridge, Greg McCabe, is a godsend. He's been respectful. He's done everything they've said, wanted, the SEC, FINRA, all of it. And he's been his company has just been sucker punched and kicked while it's down and just totally mistreated by the system. But he's remained resolute. And I tell you what he did today by putting out this press release, I think is really impressive. Anyway, it's something where you can start to learn what actually is going on. Some of it, I'm not a lawyer, and I was never involved in it, so I don't know all the tricks. But if you can allow yourself to think about things that aren't entirely in evidence, you can sort out what they do, and why it's so difficult to beat them. But it's to translate it to Railtown. Remember two things. And the reason some of the companies that succeed, even with this credit, it's worse than credit. At least credit card debt is unsecured. This crap takes the whole company. I want your blood, and I want your soul, and I want them both right now. I'm your Huckleberry. My argument isn't with you, Lunger. Oh, I beg to differ. All right. It's 4:00. I don't really have a lot to say on Railtown. I have some things to show you, but I didn't bother boring you with some stream of consciousness, why it's a great deal. I warned you, and I think I lost my cool. That's when the lights went out. I warned you. We've been here before. I just don't know what to tell you about Canada. It's different than the United States. They take 4 and 5 and 6 week vacations, and we're in it. I don't think Railtown's going to take vacation, but we're in it. So the beat goes on. The beat goes on. Would you say that Lindsey Graham was a man with a good and mighty heart? Maybe I didn't know him. There's another earthquake in Japan. They probably won't let us know about it. If it's near one of the power plants, it's not a good sign. So I don't see what happened with BB. I guess that's good. It hit Kumamoto Prefecture, and yep, there's a power plant. buildings collapse. The Tohoku region, northern Japan, the eastern coast of Iwate Prefecture, and Amori Prefecture. And they were, that sounds 7.2 magnitude. And in Japanese numbers, that's probably, I don't know, 9 or 10 on ours. They have a different scale. I hope it didn't get into Fukushima. All right, let's see what we got from you guys. Hopefully one of you will have a question that'll get me talking about something that's interesting to you. Harbison. Hello, Bill. Hi. Joe Marty. Hey, Bill, bought 1,000 more. Wow, Joe Marty. Congratulations. Keeping your head while all around you lose theirs. You know, Joe Marty, that 1,000 shares, even though you already have a big position, that 1,000 shares could pay off a credit card debt, or it might pay off a car. It might pay 1 year's worth of, or 1 semester's anyway, with today's prices, worth of school. Just 1,000 shares. Good job. Good job. Darren Collins. Sir William, good day. Good day. Fast Eddie, afternoons with Bill, yeah. Late evening. Pat M, hi gang, hi Pat. Joe Marty, had some extra change in there, bought another 25 before the bell. I'm telling you, it's the right thing to do. In my opinion, it's a better place to put your money than cash, particularly since there's a chance that overnight, at some point in your lifetime soon, the dollar will be repriced. Bob Zest, hello, fellow Railtowner, snack 4,900. That's great, Bob. That's awesome. Yay. What's up with Mmtlp? Gone HJ8JW. Well, they put out a press release. We'll go over here in a second. They put out a press release with all the shares. I won't characterize it. I'll read it because I don't want to get it wrong. But basically, they listed the holdings of, I think, all of the brokerage firms. But maybe there's some room there that it's not a complete list or something. But I think it is complete. And it's all the brokerage firms who own or hold block certificate of NextBridge at Equinity. Pretty powerful thing to do. We'll go through it. But I think we got to talk a little bit about Railtown first. How many of the following are examples? How many It's almost the beginning of a Conway Twitty song. Do you think it's better to be 100% concentrated in Railtown or increase diversification to include other sectors like energy, banking, and uranium tourism? I guess it depends on how much money you have. If you have a big account, go ahead and diversify. But most people, the way I see it is most people here should have treated their account perhaps as a method of diversification in some high risk investments. Had they done due diligence on, maybe they could have avoided some of the losses, but I don't think any of us really knew just how pervasive and systemic and systematic these strategies are to take our money. So I think a lot of people here made investments with goals of 10x, 20x, 100x. And certainly early on, some of the stocks traded that way. But most people, including myself, didn't adjust, didn't trade all that intelligently, particularly in retrospect. But we didn't know. We had a story that was being given us. And I think we've learned that this has gone on a long time, and it's well protected and well designed. But no, as you've noticed, I've brought up, and I intend to have an interview on Total Metals, and I might do another company. I'm undecided, but I may well do it. But when I brought up Total Metals, it was as a distraction almost, a small trade, a small investment, while we waited out Railtown, because the hardest part about making a big strategic allocation is waiting. And it's the hardest thing. Every day you look. And so to have something that could double or triple, take your money off the table, and then have exciting upside, and also in the gold mining space, sounded pretty awesome to me. But the fires in Canada delayed the drilling that they were going to have this July, and July's almost over. And so the stock sells off, and I think for legitimate reasons, because if a company has raised money for a drilling program and it's delayed, you have questions about the financing. But even more, what if they had deployed the rig? I don't see, and now I'm using oil terms, but what if they deployed the rigs and the workers to go do the drilling, and they all got burned down? Or the rigs sit and the workers are in a hotel for a month and they're not doing anything. That burns a lot of capital. And so I think the sell-off occurred because of those kind of risks. My information is with Total Metals, they got lucky. They had not deployed the teams, so the clock didn't start ticking. They still have the cash, so that's good news. I just don't know when they get to go back in. I tried to look it up. I don't know when the fires stop and the smoke clears. So I've recommended that. I think silver and some other things, but no, I think right now with Railtown so inexpensive, it's extremely difficult to diversify, and I think it's stupid to diversify away from Railtown. And of course, that's my opinion. You got to do your own, fit it into your scenario. But if somebody owns, as a lot of people here do, if somebody owns 100,000 shares of Railtown, it's worth approximately $23,000 right now, 100,000 shares. Now, your idea is to diversify that. What is it? Energy, banking, and uranium tourism. I don't know if you're being an arsehole or that's really a field of investment. But let's take your question seriously. If you have $23,000 worth of stock, that's your account. Let's just assume that's your account. And you want to diversify into energy. All right, let's pick a good one, a reasonable play. What's out there that's inexpensive that I like? There's not much that's cheap. Private equity's invaded that field too. But let's just look at Apache. They don't call it Apache anymore. They call it APA stock, APA Corp. Yeah, $34, $35 actually. So let's say we're going to do Railtown for, let's just do half in Railtown. So we're down to 50,000 shares of Railtown, and we're going to do APA for some energy. What's the other one? Banking. Who would I do in banking? Fifth Third. Visa, MasterCard. Banking is not an area I would be looking at right now. Over the long run, it's great, but just as stating banking, I'm really worried about what's coming. But let's just pick Fifth Third Bank. Fifth Third Bank stock. Well, that's expensive, but let's do it. Fifth Third Bank. That's FITB. And that's at $58. APA was, I can't remember. I didn't write it down. $35. All right, and what's this idiot thing you said? Uranium tourism? Trips to Chernobyl? Let's just pick a uranium stock. Maybe a Canadian one. I can't think of a Canadian one off the top of my head. UEC, Eagle. I mean, there's some smaller ones that might be worth. Yeah, Kamiko, I like that. Next Gen. The prices are all up. Let's use the VanEck Uranium and Nuclear ETF. which I'm not recommending, but you brought it up. Let's call it NLR. NLR, that way we're not picking any one. Okay, that's 106. Look, unless you have a small stock in energy, in what is it, banking or uranium, they're all going to have the same financing troubles. But let's just pick those. So, if we divide 23,000 into 5 bits, we can put 4,600 in each of these stocks. We'll divide the account into 5 parts. We'll give 2 parts to Railtown and 1 part each to, as you ask, energy, banking, and uranium. In the case of APA, we can buy 131 shares. In the case of First Third Bank, we can buy 58 shares. So we'll call that 80. And with NLR, the ETF for nuclear and uranium, we can buy 43 shares. So we divide our portfolio into half, and we reduce our position in Railtown to 9,200, and we put 9,200 on over here, and as you call it, it's diversification. I think it's merit. It's really stupid. Now, these are blue chip stocks. If you're suggesting that we should go into an energy vault or some uranium shell or into some small public explorer, well, you're going to be in the same band of stocks that get destroyed by the grim reaping. So I'm going to give you credit, which I don't think's probably due, that you're suggesting to go to blue chip or bluer chip companies. Well, here's what we can buy. All right, let's just wait 6 months, and I doubt you're someone that can wait 6 months. But let's say we wait until the first quarter of next year. And let's say your diversification works, which I think is an open question. But let's say that Apache, it used to be called, Apache goes to $50 a share. And let's say that Fifth Third Bank, we'll say it'll go to $100 a share. Just to see how your diversification theory works out. We'll say that goes to $100 a share. And then we'll say this ETF, because power is in demand, we'll say it'll go to Heck, let's say it goes to $150 a share. Okay, so you see what I'm doing? In the first quarter, your diversification, because you just used a word you read on a bumper sticker, you have no idea how to invest. But diversification, I'm giving you credit that you want to get the risk profile up. I doubt that. I think you're probably thinking of other crap stocks. But let's just look at it. So we've taken half of our account, and to use your word, we've diversified. Well, I've given really high targets. Let's figure out what it becomes worth. Now we started with on this half of the account, we started with $11,500. I got to get another color. So we start with $11,500. And the stock for APA, we got a smashing 131 shares. It goes to $50. So APA gives us a nice return, a nice position. APA is now worth $6,550. I'm assuming all, which I think's a bold assumption. I'm assuming all of these go up. So Fifth Third Bank goes to $100, and we have 58 shares. So that goes to 5,800. And then we have the uranium ETF, which is probably more blue chip than anything you've ever invested in. And we're assuming that goes to $150. So that's a big move. That also goes to about 6,500. It goes to 6,450. So your diversification, just assuming it all works out, you're feeling pretty good. You've increased that half of your account to and you're just using a term you heard somewhere. Hey, diversification. At least I'm diversified. You wear it like a badge. So that part of your account is now worth $18,800. And you're thinking to yourself, see, diversification was great. I increased my account on half of it by about 61%. That's fantastic. I'm up over 60%. Well, let's say Railtown, because of your idiocy, because you need to follow something you read on a post somewhere. Don't we want to be diversified? Well, let's say Railtown goes in the first quarter, goes to I'm going to say in the first quarter, which includes March. Let's say that Railtown goes to $23. Now you've reduced your position to 50,000 and you feel like, hey, that was diversification. That was reasonable. Man, I feel good. I can tell people I'm diversified. Well, that part of your account did really well. It went to $1,150,000. And if you combine them, you look like a sheer genius. How many? Because you've turned your account into $1,168,000 $800. And you can tell people you were diversified. You've turned it into $1,168,800. And you were so smart, you took your 100,000 shares of Railtown down to 50,000, and you invested in sectors like energy, banking, and uranium, and you were able, your Railtown went up and your diversification went up. You're a bloody genius. How many? All right. Have you ever heard of something called opportunity cost? Have you ever heard of something like making a really stupid decision? Let's say you had just left well enough alone and you didn't diversify. You treated this, as I'll explain in a second, as your 10th investment, 12th investment in a series of high targeted investments. And this is the one that actually works. So let's say you left it alone and the stock goes to 23. You add these together, I diversified your account into blue chips. You, if you're one of the shorts, would diversify into crapola. But anyway, here's, if you just left well enough alone, kept 50,000 shares into both halves of your account, in the first quarter, you might have $2.3 million. Why? Because Railtown made it work. Why did it work in your scenario at 1.168? Because of Railtown, not because of your idea of diversification. So that's my answer. No, I think you should be completely in Railtown. Now, let me clarify that. If you're which we've become a a high growth technology and other special opportunities institutional fund. And what you do is you target, you call your investors' money, and you target not all at once, as your due diligence allows. I'll just use 10 because I ran out of space. You target 10 investments. You have this criteria. Each investment has to give you greater than 10x. Greater than 10x. Each investment, in most of our experience before, and I'm not recommending it here, we were seeking short squeeze because we experienced, I didn't, but we experienced it in AME and GMC. So that was one of our criteria. And we were also, I think, actually seeking greater than 100x, even 1000x. And in most cases, we didn't really do a lot of due diligence. We just listened to the breathless stories, whether it was insurance or a group of scientists that were going to try to develop energy at a nuclear power station. We listened to a guy who bought up a bunch of rather plump models, because that was the style back then, for penthouse in a storage shed, and he was going to turn this into a fortune. We listened to a CEO who had contracts, Africa, North America, Europe, and he was going to know how to make money selling medicine around the world better than anyone else in COSM. We listened to a story where a guy named Reichman had an idea that he would incubate companies and help bring them in, take a piece of the company, get them ready to float, and keep a tiny bit. And that company was going to merge with this and that and that and this. And that was a brilliant thing. And when you look back, you wonder if the people that were fighting with you were part of the whole thing. You never know. And then we were in a wheelchair manufacturing company out of China, because we thought that was going to be organized into a squeeze. We were in a company that had an app. Hey, an app. Hey, that sounds good. It was a charity app. It was a payments app. And it was out of Dubai. Well, the investors were out of Dubai. And there was a guy bringing in, he was selling his Bitcoin or some other crypto, and he was going to put it all into a real estate portfolio, and the company was going to live off that income at 20 or 25%. And the company was going to, Goldman Sachs was interested in it, and the company was going to squeeze. It was breathless. That stock went from 65 to 10. It met cents to 10. That met our 10x, but very few people sold, because back then we didn't even have the discipline. Even when it hit, we didn't have the discipline to get out. And then, I don't know, what's the other one? GDC, company that has some other something out of China. It does something out of China. And then we're in Finger Motion, run by a nice guy, but he thinks like an accountant. He's a very hardworking guy, but he had, with the hard work of him, he had at least 3 or 4 years to change his company's income from top-up money, which basically has a lot of competition and makes us, it's safer, but it has a lower margin than a grocery store. And I don't know, these were our names. So in COSM, it was a crap out. In the Penthouse Chicks, what was it called? Vocal? Crap out. Peter Boards is getting a lot of coverage now on his comments on AI. His stock, crap out. And it makes you wonder if he was part of it. GDC, crap out. G-Bucks, I don't know. Is it still got some value? ZJYL, crap out. GTII, crap out. And that leaves this one, G-Bucks. I'm going to say that's a crap out too. So now we're left with Finger Motion, which is going to crap out, but you could argue it's just down. A non-performer. And let's pick Energy Vault. It's down by half or more. And so that's a non-performer, but it's still somewhat alive. I'm doing it with 10 investments rather than 12. So the ratios are a little extreme. Normally, you'd aim for 10 or 12 investments. 6 would be write-offs. 3, you'd kind of get something, up a little, down a little. And then the other 3, you'd get good returns on 2 or 1. And then on 1 or 2, you'd get these fantastic home runs. That's how a venture capital fund or a private equity fund looks at their allocations. So I would suggest to you that what we've done for 5 years, and I wasn't there for the AME and GMC, those, you didn't lose your money. They would fit. If I put 12 here, you could put those 2 out there and you still kind of got your money. But what I think you should do, how many, is treat the last 5 years as if we were behaving the way we are now, which is as a small bespoke maybe, or a small ragtag institutional fund. And we did our diversification already. We already did it. We did 10 deals, 12, and we were chasing the same basic story. We had our chances, but remember, we're chasing the short squeeze, so we don't get out at 10x because we're actually looking for 100 or 1,000x. And we did it time after time after time after time after time after time. Again, we might have a couple of stocks that still have some liquidity value, and we think they have. Finger has no hope. Well, what's this other one? Energy Vault. I think it's questionable, but it might exist. But I don't think it's going to give you tremendous returns. So we have a couple there. And then at the end, we have Railtown, which has not had its thesis disproved. We got in it because AI in general is massive. We got in it because that's where all of Wall Street's money's going. We've stayed in it as we've done our due diligence, particularly, just to fast forward, in the area where all of this sunk cost has gone into AI. All of this money's gone into chips. All of this money's gone into data centers. All this money has gone into copper and glass light pipe, Corning type infrastructure. All of this money's gone into the large language models and into the government consulting deals. All of this time for engineers, all of it. And the profits are illusory. In fact, the performance of these large language models don't meet what the end user wants: trust, cost, safety of data, in many cases, and redundancy. One could argue inside of Google they're getting that. One could argue inside of Microsoft they're getting that. Inside of Apple, but it's not that sure. It's not that sure. There's a lot of feedback that it's not quite working as everyone's promised. Anthropic seems to be making money. OpenAI may not survive. Oracle may go down. What's the key thing that's missing is what makes all that investment into compute stacks, data centers, whether you use the centralized model or the distributed model, the smaller micro centers closer to origin. All of them need the orchestration layer. They need the governance layer. They need the inference layer. They need the agentic AI organization layer. They have different names for it. This is where all of Wall Street's money is going. In fact, private equity are hoarding the companies that do just this. Why? Because it's that layer, broadly spoken, that takes the raw commodity type costs that are massive, adds the upgrade so that users actually get predictable performance, they get profits, they get cash flow, they get trust, redundancy, and cost savings, particularly because of the output. You could rent out GPUs instead of doing it daily at a flop house, you can do it not only by the hour, but you might be able to time it by the time whatever happens and the showers are taken. You might get it down to 15 minutes a room. And so you get it that you're increasing the revenue on the GPUs. This is the orchestration layer. This is where all of the money is going. Now, that layer has a lot of different components, and the best place to be is where you're metering, where you're ingesting, you're able to ingest data real time in addition to processing existing data, where you're agnostic to the data centers, where you can handle 33 different languages, and in real time, you can, in a nanosecond, you can prevent hallucination, you can prevent the spending loops, you can direct tokens, and this is all an evolving business. But there essentially are no companies that as an individual investor you can buy on the public market. They're inside of private equity channels. There's probably a dozen, maybe a little more, names that are trying to get into this and trying to succeed. And there's probably another, if you include the hyperscalers, there's probably another 6, maybe a little more, that have gotten funded and are in there and apparently are doing something. But it's a highly fragmented business, and no one has claimed the space. No one has claimed the space. And particularly if you want to be agnostic to the Google silo, the Microsoft silo, the even the IBM silo. If you want to be agnostic, there's that space hasn't been claimed. Now, you can invest through a mutual fund, or you can diversify by buying one of the hyperscalers, but then you buy all the crap they have to deal with. The contracts with the data centers, having to find tenants for their data centers, having to pay the loans that they borrowed. Instead, there's this company that has the ingestion engine. It has the real-time governance and tracking and safety rails, and has the ability to build the AI tools so that when AI agents are talking to other AI agents, the suite of rail tracks to rail engine to conductor can solve that whole thing. This is a business where the batter has just finished scratching his balls, and he's knocking the weight off of his bat, and he's rubbing his hand, and he's looking at the scoreboard, and he's strolling to see his picture, and he's strolling up to the batter's box. He's not even in the first inning, first bat. And you want people to diversify away from that. The potential for this public company, which never took toxic financing, the potential is for this company to take its place among competitors, but I think it might be best in class, to take its place first in Canada at data centers. Hive, which is Bell Canada, TELUS, we have links to those. One is stronger than the other. We know about Unisurf. And now we know that WSI has been hired to go into the Virgin, just like a sturgeon, touched for the very first time. They're going into the small and medium enterprise business in Canada, which is essentially all the enterprises in Canada, other than the government. And what does the government really get done? I don't know. And they started in July. Now, the sales cycle, and I doubt they just started, but the sales cycle takes 30, 60, 90 days. And they're leading with what is called service-led. This is what Microsoft did as the IBM mainframes were replaced with PCs. It took a while, had to be shown how to do it, had to have consultants, you had to go sell it. Well, then Microsoft evolved to product-led. Everybody was using it. All they had to come out with every year was a new product, and people upgraded. They signed up for Microsoft. But at first, you've got to go out and get people comfortable. It's same with the App Store. People weren't ready to go on. So Apple made their SDK available for developers and engineers. It was essentially free to build Apple apps. You put it on the app, and all of a sudden, Apple's charging what? A third? 40% of the revenue goes to Apple. This is the model Railtown is just beginning. And you want to diversify? Railtown has the chance, and we can debate to the end of time whether it's a quiet period, a blackout, or a NDA period. Doesn't matter. The same impact comes. Railtown, because they bought AIP Partners, and because in Canada everything is run essentially by committees, and you got to make sure those committees are either 50% or majority women. Otherwise, you don't qualify in Canada for doing the right moral thing. I would submit to you, when you have a group of women doing things, it's more about, let's get to know each other. Let's make sure everyone's feelings are okay. And these cookies taste good. When you have men together, think every team you've ever been on. I haven't been on that many because I'm not a jock. But the coach comes in and chews your butts out. And one guy is a complete jerk, and then another guy's the superstar, and he's the leader. And everyone else just kind of knows their job. They got their buddies back, and you go get her done. Now, it's two different processes. I would argue the man's process is very disruptive to their psyche. It probably is mentally difficult later in life. It probably leads to drinking. It probably leads to, it's not a perfect system. And the woman's system is probably better in many ways. On the other hand, leading by committee never gets anything done. And my first exhibit is Canada. So when they went to buy AIP Partners, it took from February 11th, the announcement, they started in the Christmas time, all the way to the end of November to close that deal. That's Canada. Well, that whole time, you can call it a quiet period or a blackout or an NDA, or you can call it whatever you want. But during that time, there was no buying, there was no communication other than filings. There was no promote. It was also an R&D process, because during that time they met TELUS, and TELUS has these data centers. TELUS said, we want you. You're Canadian. We're Canadian. We're building Canadian sovereign data center. We're the first one. But again, the committee approach in Canada, they gave up their entire head start. It's just two different things. Go get her done, make everybody feel good. It's just two different processes. When they're combined together in a marriage, it kind of works. But we're not, after 100 years of enlightenment, 140 years of enlightenment, we've now decided that we got to go to war with each other, and it's all the straight white male's fault. So we're in this situation where everything has to even up. It's interesting. But Exhibit A is Canada. So they sign up with TELUS, and guess what? It starts another process of meetings, lawyers. You've got mandates. The thumb is on the scale. You've got to have 50% or better of your attorneys have to be female. Well, you know what? A lot of them, I hate to say it, I've seen it. They meet somebody, they get pregnant, and they get married. They leave. Well, what does that do to your ratio? You got to go get another one, and you got to promote them quickly. And their whole in life, this generation, they've never once been told, you suck. You don't know. You can't throw the football. You can't get her done. They're just great the whole way. And so their mental attitude when they come to these organizations, it's all, hey, I'm great. I do everything well. And then nothing gets done. I'm not trying to be sexist. I'm just telling you how organizations are designed. And so you got to keep that ratio up. But the people you're training, who, by the way, are taking men's seats, and so when those women get in their 30s and 40s, they can't find someone better than they are, more money, smarter, because that's how their thinking is. Of course, men, they're not that complicated. They just want calm, kindness, and someone that's nice to look at and that can be a good mother. That's unfortunately all men think about. They don't really, it's a little further, but it's very simple. They don't care about degrees. They don't care about, it's not that complicated, but it's become complicated. And you've got to keep these ratios. So as the women get married and leave and they've got experience, some of the women leave because they don't want to do it. They don't want to do all those hours. Well, they can't find anybody to marry because the men are out bartending and out digging ditches, and that's not impressive. We've, as a society, changed the roles for women. They have all the choices. We haven't changed them for men. And so we have this unhappiness. But one glaring thing you have left is you can't meet your ratios. So you got to go hire some more young people, mostly women, and you got to promote them too quickly. And they haven't gone through the school of hard knocks. And so you get these organizations, Exhibit A is Canada, that can't get anything done quickly. That's my opinion. So you get TELUS, and TELUS had a head start. But TELUS has squandered it a year later. They still haven't ramped up. And now it might be for reasons to do with a leadership change. It might have reasons to do, they're waiting for the Vera Rubin chips. There's other explanations than mine. Mine might be the asshole explanation. But the fact is, whatever you call that period, quiet, blackout, a period for safe spaces and getting to know each other, and let's gather, and whatever you want to call it, there was no buying, no news, no promote, all the way through, as it turns out, all the way through the first quarter of this year. And I would call that the TELUS blackout. The first blackout is the AIP blackout till November. I would say the November through the first quarter is the TELUS blackout. So what happened in the second quarter, which we've just gone through? Well, I guess it's a continuation of TELUS. I guess it could be a continuation of AIP. But my suspicion is the next blackout period was government. They had the November meeting of the 28th. They had the AI for all. They've had a lot of word salad coming out of Carney. And they had the June 1st deadline in Canada for applications for funding. And if you wanted that funding, you had to hush your mouth. You don't want to call it a quiet period because technically it isn't a quiet period. So the CEO, if asked, are you in a quiet period? He can say no. But he can't elaborate what's really going on because he'd be giving information to one or two investors and not telling it to the whole world. So he can't point out, but we're not in a quiet period. But we signed NDAs with the government and we're expecting funding because our relationship with digital allows us to apply for it. We're expecting funding, and I'm guesstimating this. We're getting funding for our network partners, and we might be getting funding for our project to install in the different data centers. But more importantly, we may be getting funding to entice people to move their AI spending into Canada. Don't know, but we can't talk about it. Now, he's not allowed to say that. So we've gone, in my judgment, from an AI period blackout to a TELUS blackout and maybe a second quarter, which might have been first quarter too, government blackout of information. Now, during that period, Railtown has been working, as they have all along, not only hard, but with their brains. And they are there with the orchestration layer. This is the layer, how many, that is going to meter, direct, and orchestrate how agents work, where they go. It is going to be the layer that turns all of the hundreds of billions, if not trillions, in AI investments into revenue. That revenue is going to grow, and that revenue is the single largest market on the face of the planet. All of the all of the computer software that you grew up with, that even gave you the word diversification, all of that computer programming was built using SDKs, software developer kits. All of that has to be rewritten with ADKs, agent developer kits, AI developer kits, agentic AI developer kits, agentic developer kits, whatever you want to fully name it. It's ADKs, which is Railtown's bailiwick. The size of that addressable market dwarfs even energy. It dwarfs, I don't know about banking. I don't know about worldwide banking, but it's up there. I'd have to look that one up. It dwarfs uranium. But I'll tell you what, banking is AI right now. Banking has bet the lot on AI. What makes it work is the orchestration layer. That ADK software spend is trillions with a T every year from here on out and growing. The single largest source of revenue in the world. And Railtown just has to get a tiny bit of it so that people's investment here at 23 cents, whatever they paid, today it's worth 23 cents. As soon as the blackout is eliminated, whatever you want to call it, the blackout is gone. Buyers can come in. I think the blackout is going to be removed in stages, deal by deal, NDA release by NDA release. But Railtown has a path to, I would argue, and the other very reasonable source of information who, just has a different perspective. He's looking at the same information I'm seeing, but I don't think he sees the picture. He probably gives you this advice to diversify in a slop of manure and pig feed and blood and guts and gore. Just diversify in this and try to gain your footing. Railtown has a clear path, in my judgment. It might take 5 years, but Railtown but it could take a lot sooner. And it doesn't matter how long it takes. All it needs to be is modelable. I think Railtown has a clear path to 2, 3, $5 billion. That's with a B. With a B, not a T, a B. But not an M either. A B in annualized revenue. Why would you diversify away from that? As soon as the blackout starts easing, which I think we've seen with 2 announcements last month, and one of the announcements clearly stated that Railtown, if you interpret it, has gone from being an R&D company to a commercial company, to a company that is putting its efforts in engaging customers with one of the world's largest marketing firms. And that's starting right now. Why would people who bought Railtown at 60 cents, 50 cents, 40 cents, 30 cents, 25 cents, and have ridden out a year and a half, the one thing that the risk we had, which turns out, and my exhibit A is Canada. Go woke. Be as slow as a poke. That's what I think Canada is. So my bottom line answer is I would argue everybody here should treat their past investments as their diversification in this slop bucket. It's all the same crap. But they might argue they got a couple of, they might still be stuck on them. But this number 10, just like an intelligent institution, it's the one that gets us out of here. And, you know, all these smart people, I don't know, the Cubans, the Andreessens, and all the rest, you go back and you'll find 1, maybe 2 investments that did it. And if Railtown is able to turn TELUS projection of $2 billion in AI enhanced revenue, which what is it? It's their data centers by 2028. Let's just say TELUS, I'm going to go with my standard 1 billion because I'm leaving out Uniserve. I'm leaving out the AI network. I'm leaving out the cross sell. I'm leaving out a lot of stuff. So I'm going to say that's 1 billion in annualized revenue that's going to be split. TELUS needs Railtown. That's my thesis. TELUS needs Railtown to turn its data center into a money-making machine. And Railtown's the meter. So let's just assume it gets 20%. That's 200 million in annual revenue for Railtown. Now, Buzz, Hive, BCE, which we've already seen indications, they've made projections there too. And it's bigger than TELUS at this point. But let's just say it's twice as big. So we'll add to Railtown's from Railtown's projections. I'm not saying this will be 2027. It might be 2029. We'll double it from Buzz. So that's 400. That gives Railtown a visible path to 600 million a year. 600 million a year. I think this is conservative over time, but it might be a little high in the short run. I think this is really conservative when you say that buzz is Canada, Paraguay, and Sweden. I think this is really low. So these two data clusters give you a projectable revenue of 600 million annually for Railtown at 100% revenue, and it's growing, and it's every bloody year until you're my age. Why diversify away from that? That's two data clusters. Two. So that's 600 million annually. Let's assume Railtown, who hasn't been sitting on their ass, but what about news? It's in a what? Blackout period. That's easing. So let's say each of those data centers gives a projected 300 million in revenue, those clusters, to Railtown. Right? So those two data centers give 300 to Railtown. Let's assume there's a customer in the United States. I can't imagine which one, but let's just assume there's one because we're the largest economy in the world. That's 300 million. I hesitate to pick what data. It could be Elon Musk. It could be Verizon. It could be somebody. Let's say that they get a customer in Europe outside of Sweden, because Sweden is with Buzz. Let's pick it Germany. Canada and Germany have bound them together. Let's say it's Germany, and we'll only pick Germany. We'll leave out the UK. We'll leave out Italy. We'll leave out Poland. We'll leave out France. We'll just pick Germany. So that's 300 million. Let's pick the Middle East. Let's broaden it to the MENA region. Middle East, North Africa, a little bit into Asia. So let's say, which one do we pick? Turkey? Saudi Arabia? Let's pick Saudi Arabia. But we'll leave out the UAE. We'll assume we won't go to Egypt, UAE. We won't go to Iraq. We won't go to Kuwait. We won't go up to Turkey. We won't go into Pakistan. We won't come down into any of the northern part, logical places like Libya that have a lot of energy. Just Saudi Arabia. And we'll say their cluster does 300 million. And then for Asia, we've got China. We'll assume that's out. We've got Japan, North Korea, South Korea, Singapore. I don't know what to do with India or Australia. Australia is another great one. Let's just say for Asia, we got one more data center cluster, Asia. $300 million. 1, 2, 3, 4, 5, 6. And finally, it's South America. We already know that's going to be into Paraguay, but let's pick, I would pick what's the most likely country down there that's going to focus with energy and with data centers and water. I would pick Brazil. So that's 300 million. Now, the question is, what year does it happen? Well, it doesn't have to happen right away. It could be in the next 5 years, as long as it's projectable. But as soon as the news starts breaking and analysts can make their model, and they're not going to ask these idiotic questions that you read on Reddit. Don't we want to diversify? I argue you already did diversify. This is the one stock that out of that portfolio of 10 or 12 is going to make it all good and make the whole portfolio work. So you've got data center cluster 1, 2, 3, 4, 5, 6, 7. Could there be more? Hell yeah. You've only got 2 in Canada. There could be Rogers Communications. In the United States, you've only got 1. There could be easily 2 or 3 in the United States. The EU, you've only got 1. But you've got the UK, you've got France, Italy, Poland. You got Russia. I don't guess we'll ever talk to Russia again because Hillary lost an election. South America, now that's Saudi Arabia, the kingdom. Well, the kingdom could be very big, very big. They could serve Africa, Asia. They've got unlimited, not unlimited, but they've got energy. They don't have so much water, but they got a smart population and money. That could be more than 1 or 2 clusters. And then Asia, certainly. I left out India. Asia could be 1 or more locations. And South America, I just put Brazil. But you've got mountains, you've got hydropower. It's a huge continent. You've got Central America. You've got islands that could do it. So there's plenty of room for growth. So what does that all add up to in this model? 7 times 3. What is the answer? 7 times 3? You got the answer. You got it. And let's say it's 2030, although I think it'll be sooner than that. So you can project in the data center business, you can model it out that Railtown could capture by 2030 $2.1 billion in annual revenue, 2.1 billion, growing. It's 100% or close to it, profit margins, and it's sticky. Once you have it, it's there. What is 1 times 2.1 billion? 1 times it. 2.1 billion in revenue divided by fully diluted 234 million shares gives you this target of 2.1 billion at 1x. At 1x gives you a target of $9 a share. $9 a share. Why would you diversify away from it? I don't get it. All right, so what if it's 10x? Well, that's pretty easy. Can you figure it out? 10x? If 1x is $9, what would 10x do? $90 a share. Why would you diversify out of this in this crap? Now, let me make one final, and remember, the revenue doesn't have to be, wait for it. The revenue is when analysts can see it. And by the way, there may be analysts today in New York City or up in Canada who are looking at this stock, who have a small fund, and they haven't signed an NDA. They haven't seen material non-public information, and they may start buying in August. Let's say at Railtown does just those two data centers clusters, they get to 600 million in revenue at a multiple of 10. So that's $6 billion divided by 234 million shares. That gives you a target of $25.64. Let's call it $25. Now, to go to your absolutely stupid suggestion to diversify, if someone currently has 100,000 shares of Railtown, it's worth $23,000. Now, let's say as they've moved from R&D to production. There will always be R&D in the software, but they've moved into production. And they're going to go after the SME business in Canada, which I didn't include in my projections. And the AIP network, 200 companies doing 500 million in revenue with 5,000 or more end users. I didn't add that into my projections. But let's just say that as they start announcing these things, and it might be in September, October, November, but as the news blackout thaws and buyers come in, analysts are doing this modeling, and the stock gets to $25, let's say, within 9 months. Well, that $23,000 turns into an account worth $2.5 million. If analysts start buying it, institutions start buying it, and let's say by March of next year, it's $25. We haven't seen this happen yet. And your account's worth $2.5 million. Why would you be diversifying as you just idiotically suggest? I don't know. Because you've done the due diligence, you know the potential here. The risk reward, the asymmetric setup is unbelievable. But let me show you what happens if you can just hold your horses and wait. And of course, it's not riskless. We have the whole risk of Donald Trump and Bibi Netanyahu's war. We have the whole risk that the entire world regurgitates the dollar and American supremacy. We have the risk that Fukushima Daiichi just got shooken again, And in California, women are going to start recognizing that they're getting cancer, and they're going to tell their husbands, sell our property. And when the property market crashes, that the banking system crashes. There's all sorts of scenarios you can come up with that are frightening in the short run. But commerce will continue. People are going to continue doing business, and commerce is going to AI and agentic AI. And even if the multiples shrink, the company that owns the meter gets the maid. So now what happens when your account is 2.5 million and you want to diversify into other sectors like energy, banking, and uranium tourism? Well, guess what? Your account was worth 23,000. So to diversify there has an enormous impact on what your account is going to be worth in 9 months if everything works out. And I'd say our probability is very high, but we got some things to look out for. So what's then? Well, then you could take that same 23,000 out of your 2.5 million, and you can diversify in a bunch of other crap. I do think, I'm not making fun of diversification. I just think it's idiotic thinking that owning ZJYL is diversification, that owning G-Bucks is diversification, that owning COSM, like Tolstoy King said, is diversification. It's all the same slippery slope to the shite slope. So now you take 23,000 and you could use that either to diversify, break it up, and that's all you use, or you could do it multiple times. But guess what? If you do it then, 9 months from now, it'll come, it'll arrive. Your account today of 100,000 shares of Railtown worth 23 that you so idiotically want to diversify with, well, it becomes 1% of your account if your 100,000 shares go to $25. And then you can diversify and it doesn't change your life. Right now, if you diversify, your account could be wiped out, as it has been. So in summary, I think your question is insincere. That's why I'm being a jerk. But I think you're stupid as hell to make that suggestion. Snoopy, hey, Bill. June, it's always nice listening to you, William. You're such a wise and high-class gentleman, a real professor type. Yeah, I sat with my friend from school who could not have gone higher at the U.S. State Department. And he thinks very highly of my father. And I guess my father helped him. I didn't know that until recently. But anyway, great guy. He's teaching now at Princeton. And I told him before, I had forgotten that. I said, that's what you should do. You should become a professor. I can see you. So it's interesting you're suggesting that I do that. You're very kind, June. I'm just being inspirational. You're very kind. Donna M is here, our leader. Hello, everyone. CJ Yukon, I forget where he's from. Is it Texas? Laredo, Texas. I'm going to see about Joe Ely and Laredo. Was it an album? Joe Ely, Laredo. Oh, Letter to Laredo. Do I dare play it?
Hey, yo, this week only, all pizzas are half off at Domino's.
Yeah, hey, yo, yourself.
Order online, in-store, or call.
I don't want to hear
pizza in
this.
your hands.
Join Planet Fitness for $1 down and get up to 3 free months of Apple Music. No commitment. Deal ends July 31st.
That's all I can play. That's all I can play without getting in trouble. What are the lyrics? I can't find the effing lyrics. Letter to Laredo. This guy says, by Joe Ely standards, this is a very mediocre album. I thought it was great. I used to listen to it all the time. That gives me more music to look up, I guess. Lyrics. Wow. I couldn't remember these lyrics. As I was rolling across the Mississippi, I stopped there and cried. No use for a man to keep a mighty river all dammed up inside. I jumped the ball from Sweetwater County. Now I'm on the run. On my head is a 5-number bounty for a crime I've never done. Take this letter to Laredo. I remember that. Yeah. To the one I love, tell her to stay low beneath the stars above. Her love is my only alibi. It's for her love I lied. Yeah, I remember that. Why did Frankie have to pull that trigger? Why do you have to hide? The sheriff still thinks I was standing with her. It's for your love I lied. The sheriff still thinks I was standing with her. Love will make a free man a prisoner. Yeah. Will make an honest man lie. Probably. Love can be tough. Love can be tender. It's my only alibi. Take this letter to Laredo, to the one I love. Tell her to stay low beneath the stars above. Her love is my only alibi. It's for her love I lied. Yeah. Dun-dun-dun-dun. I thought it was a great album. But anyway, hi, CJ Yukon. How many of the things? I meant uranium and tourism as two distinct things. All right, well, that's interesting. Next trip might be an interesting punt, but I got to find out more information. That's tourism, but I left it off. I really still think it's really dumb to, unless you have money. I mean, it's a different case. If you have, you know, a certain net worth and you already have a big account, well, yeah. But most people here, I already forgot the name and it's not showing up. How many of you have lied down or something? Most people here have lost 100, 200, 300, 400,000, 500,000. One person I talked to lost over $1 million, and not the only one that lost that much. And so my goal here is, and it has been frustrating, and maybe I blame the wrong things, but this process up in Canada is slower than the World Bank. It's astonishing. But what's in our advantage? We have a great team in Corey and Marwan and Jack and Dr. Tom and Dr. Jack in Ruffalo and Atufat Shamsi and Norbrega and the Irishman from IBM. It's not popping in my head, and others. And they've been working all along, and they know how to swim in the Canadian waters, and they're ready. I don't think they could have choreographed it any better. They have signed up to go to commercialization in July, and they're hitting the ground running while everyone else is on vacation. I think it sets up an amazing after Labor Day. Is that what happens in September? After everyone goes back to school. And I think it's just going to be amazing what disclosure, PR, projectable revenues are going to do, and it's going to be incredible. So I think it's the wrong time to diversify. On the other hand, I really like Total Metals, and you're right if you're implying next trip. I don't know if you are tourism. There might be an opportunity there. Eventually, we're going to have to start looking at other transactions, and we can study these and you know, make smaller commitments as a way to keep our minds in areas where we're learning things rather than just constantly going over the same thing over and over again. Railtown, what needs to happen at Railtown is the blackout has to end. When does the blackout end? When those committees up in Canada, and I think it extends to the attorneys, but committees at the government, committees at organizations, committee, just get through contract at a time. And once it starts, what does it start? Remember, it changes how the computers see Railtown from just another software as a solution company. All of a sudden, the computers see Railtown as, oh my gosh, it's an orchestration inference company. It's a agentic AI. And when it changes, it percolates up to the desks of analysts and portfolio managers. And I mean, I don't know if they get it printed out anymore, but she's going to rip it off her machine, put it on her desk, and she's going to go down her model and her checklist, make a few calls, fill in the file where she needs to, and then get approval to start buying the stock. And that's what Railtown needs. That's what any of these companies need. Institutional buying. What leads to institutional buying? Two things. kick butt revenues out of the blue, a contract that is so undeniable and so unbelievable, it just changes the whole landscape. That's what I think is coming for Railtown. Or in medical field, an FDA approval that immediately an analyst can look and say, well, wow, that drug for glaucoma, that spread across glaucoma in the world, that's 100 million, 200 million people. How much is it per year? What would I, and all of a sudden the stock just blows past any of the grim reaping. The same thing in resources, gold, oil and gas. One discovery or one expansion of the resource, the asset in the ground, you just do some arithmetic and that blows past it. And, you know, there's other industries that can suddenly experience huge revenue, but no stock is going to escape the clutches of, for example, a Lynn Partners, unless they've got a plan in place either to buy out the note or revenues are going to kick butt out of the blue. Not to them, but to Wall Street. And then these things get up to the portfolio manager's desk, and she's going to take it. She's going to have a box, a list of boxes to check. She's going to check them and she starts buying. And then the whole thing is over for whoever is the Grim Reaper. Jack Hamilton. Good afternoon, William. I like the latest information released from NextBridge. Hey, Donna, and all that jazz. Pat M. Hi, Jack. T. Alex. Hello, everyone. Harbison, buddy of work now is 200. I'm going to put that down. That's a nice position. Good job. And be proud of him. We're all going to be proud of each other. I know, Pete Greek, that we all keep buying. Price keeps dropping. Don't get all pissed off, William. I'm not selling. Yeah, Pete, what we've learned, and I've learned, it doesn't matter how good the story is. It doesn't matter how we project how good it is. It doesn't matter all the layup. These machines, these robotic sellers, they don't read any of it. They don't process any of it. There's no human being doing any work. The only financing out there is scum like Jeff Easton, in my judgment, and Kurt Kramer and those ilk. But that's it. And they don't really read. They just want to see the volume. And if you sign it, they're not even that concerned with the assets you have. They just want to know they can sell enough stock and use money that's created out of thin air, basically, and profit. And they do it with a portfolio, and they got hedge funds behind them. But Pete, without picking on anybody, what that does, these machines, these algorithms, imagine if you had a computer or three in your office and they're reasonably powerful, and you had some geek come over, or maybe you had somebody that's at an arm's length to Stevie Cohen's funds, but you have somebody install an algorithm, and one algorithm is for trading, but another algorithm is to screen news releases. And another algorithm might be there to just do day trading across some parameters that may or may not overlap a deal you've done. But the net of it is these machines are looking for certain parameters. In the case of Railtown, the only evidence they have that matters to them from a year and a half ago is that Railtown entered into an LOI and all that. It took 9 months to close that deal. So they've probably understand that that deal's done. But in that press release was Canaccord Genuity. So they recognize, if we can keep this down and the company needs to go get money, they're going to go to Canaccord and it's going to be one of our buddies. The computers don't call people buddies, but it's the parameters set. So that's one of the goals of one of the computers is just grind these stocks down. Once the middle computer reads the news, and then that middle computer is reading for news releases, everything that's come out since then has been either been a puff piece, a meaningless news report, or just improves, just keep selling, just keep selling. It may happen. Now, those algorithms they have some safety valves. So if it ever goes suddenly upward, they'll step away. And that system has hedge funds behind it, in my judgment. It has attorneys behind it, in my judgment. And they'll be rescued. So but they just keep the pressure on. Why? Two goals. One is when the company needs to raise money, they go through a Canaccord or someone, they sign a toxic note. Second goal, which is tied into that one, any pending transactions, any pending hiring, any work they're doing, anytime they're making the company better for shareholders, when they come to market, it'll be at a discount to the lower price. By definition, it'll destroy the per share value of whatever they're doing and lead to, go to point one, they need to raise money. It'll come to this system. It might go through Jeff Easton and they'll destroy the stock. That's that one computer. But the other computer on the other side is just an algorithmic computer. They know this whole system exists. They know there's no regulators. They know there's no organic buying. There's no research that matters. There's no institutions. And so they use the computer that screens for news as long as Railtown, in our example, doesn't announce a big revenue deal, doesn't change its description to the hottest description on Wall Street, doesn't lock in a name brand like I don't know. Let's say they locked in a trade with IBM. As long as none of that happens, and that's the news, the computers read the news, not a human being. They keep pressing on the stock. And you got it exactly, Pete. I don't think anything we've ever bought has affected the stock price. They continue to sell stock that doesn't exist. And they count on us losing our cool, like I often do, because the pressure is so intense. We look at that stock price and we figure William must not know what he's talking about. That somebody must know that Corey Brandolini had an affair with his best friend's wife or some nightmare. Or whatever they spent the last 7 years developing, a genius in Palo Alto just bypassed it completely. They must know something. They don't know jack. They do not know jack. And The price is a reflection. Both, unfortunately, I'm not intending to do it. We may have some impact on keeping the price up. I think it's all out of Canada. But the price is a reflection of some buying by retail. But every time we buy, we're limited. We don't have a lot of money. So they keep the reaping going. They keep the grinding going. They keep harvesting pennies. They keep harvesting. And they have similar goals to the first computer. If they can destroy the company comes for funding, and then they can really hammer the company. But as long as the middle computer that's in charge of reading all the headlines doesn't find that Carney just signed Railtown for the National Defense Systems or something, I made that up, they can keep grinding, because you know what the system is set up for? And this is what Mmtlp says. They've got all sorts of workarounds around securities laws. And they can just sell and 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 sell, pretend to sell. They can spoof. They can do it forever. And the SEC's not going to go after them. They don't care. They don't care. Ann Wagner doesn't care. Adina Friedman doesn't care. Chuck E. Cheese Cromwell doesn't care. Then nobody cares. So they can just keep selling. And you got it exactly, Pete. We all buy, and we think so many of us are buying. We're up to well over 23 million shares. And nothing happens to the price. It just keeps getting crushed. They've set up the system to steal. They've set up the system to lie and manipulate and take, as we go to wars, as we've gone to endless wars on behalf of the chicken hawks here in the United States, on behalf of the Zionists, on behalf of Israel, we've spent at least $10 trillion. I think we've already spent it, but it may factor in with future costs as well. And it might be higher than that. You know where it comes from? We can just write a check because we're the world's reserve currency. You know where the money ends up? Well, obviously defense, obviously salaries, obviously consultants. Where does that all end up? It ends up in Wall Street. It ends up in these pools of funds. It ends up, and then these pools of funds have to perform, and they can't beat each other without cheating. And this whole system is set up. And Pete, it's so frustrating. And that's why I think diversifying into any of these stocks, unless the stock has a plan, a man, a plan, a canal, Panama. If they have a plan, they can use the system. I don't think that Railtown had a plan to use the system. They just got lucky. They didn't borrow any money. So what really changed Railtown's position in terms of not needing to raise money in the United States was ChatGPT. And that's also what changed the world's perception of AI. It's also what started probably this circle jerk of financing, but it also sets up the need for Railtown. So we're just in a beautiful position. But you're exactly right, Pete. We know what we have. We know its value. And we just have to wait for these committees to do so much work. Wow, you look like you're doing so much work. It's so frustrating. I don't think I could work at a bureaucracy. I think I would. I used to think I wished I had gone to the Department of State and worked there. Oddly, my dad never encouraged it. And my friend might have carried me up if I performed. But man, I just don't think the endless meetings, I don't know how I would do it. I guess that's what they invented drugs for. But anyway, Pete, hold on. And the reason I keep coming on, I don't have anything really new to say, is the problem is there's just no information out there. And I think what you're waiting on probably is attorneys, and they're going to go on vacation, and they have their own process. And you're probably waiting on the government a little bit. They're all going to go on vacation. And you're probably waiting on companies like digital. Maybe. It could be other companies. You could be waiting on TELUS. Could be waiting on Uniserv. You could be, I don't know. But they're all going to go on vacation. And I just think the odds of getting a further relief on our blackout of news happening in August, I'd give it 15% or lower, just because everybody's going to be on vacation and it's Canada. And it's frustrating. And that gives more time for the grinding, the grim reapering, the combines to just go. And I don't want to talk out of both sides of my mouth, but the fact is that doesn't mean Railtown isn't going to go up in price in August. It could go up at any time. All of that blackout in news that we're waiting for, the change in the blackout, any one piece of news, they're going to hit it. As it doesn't even matter if it's good. As soon as it comes out, the combine of reaping and the collusion of selling and the crushing of the share price, they're just going to go into high gear. And our buying, because we read the news and we like it, if we have any buying, that's just going to help them have something to churn. But it's a start. And one by one, those releases add up. And what you're counting on, my opinion, what I'm counting on, is that there's a fund in New York or 2 or 3 funds in Toronto, or there's a manager on the newly constituted Morgan Stanley early adoption, high risk AI trust or bust plus fund. And they stay somebody distracted me. Maybe they stay over the vacation, and because the orchestration space is so important, they're doing research. And maybe it's a human being, not just a computer. And maybe the human being notices that, I'm making it up, the Buzz Hive digital BCE contract is missing. It's interesting. They announced Cohere, they announced NVIDIA, but they didn't announce what's this orchestration. Who's doing that? It's Canada, but they don't know who it is. And it might be more than one layer in there, I don't know. And maybe they do a little work. And then they all of a sudden notice, as I have, I think I have, I don't know that the connection is pure, but I've asked questions. And it just looks like Carney's old firm, Brookfield, is getting into this data center business through lending money. And it seems to be that Carney is leveraging Canada's checkbook to help his old buddies, which he'll probably return to. And maybe this Canada idea with the Buzz Bell thing, and I even think the old firm is Brookfield, and maybe Brookfield is even involved in that Buzz build out. That's what my memory's telling me right now. But maybe this analyst who's staying behind notices that, or this portfolio manager notices that, and is doing work right now to find out who that orchestration layer is. Or maybe from another direction, somebody's studying, there's about a dozen research reports on TELUS, and maybe somebody is deep diving into the change in leadership and why the heck is it taking so long for TELUS to get its data center in full bloom. And they look at NVIDIA, they see who's building that stack and why is this, it's NVIDIA, but they haven't named their large language model. Buzz has Cohere, that's Canadian, but who is it here, the large language model? And why is it taking so long? And who built this darn thing? Who was in charge of it? Who do I call? And they do a little research and they find out who was in charge of fitting out this data center and building the stack is a guy named Zaid Atufat Shamsi. And they look into the guy, he's got some videos, they want to call him, but they're looking at his recent listings on LinkedIn, and they notice, hey, he just joined Railtown. Now, what does Railtown do? Why would a guy from TELUS join a small SaaS company that helps developers get along with other developers? Why would he do that? Let me now I look in their latest press release, Railtown's moved to the Agentic AI solutions, or whatever it says at the bottom. Let me call around. Let me call some of my friends up in Canada at these various research desks. There's 12 of them. Hey, have you heard, what are they doing? Who's going to be the large language model at TELUS? Well, we're hearing it's going to be Canadian, so it's probably Cohere, but they haven't announced it yet. But if we had to project, we'd think it'd be Cohere. Okay. Well, who's going to be on that orchestration layer? Well, we don't know. But one of our junior research analysts went out to TELUS, and they actually met Zaid, and I'm making it up, and Zaid showed them around. And there is this agreement between TELUS and Railtown. And it turns out one of the delays going on is all the committee meetings to get that deal finalized. And once it's finalized, Railtown's going to be that orchestration layer. So this analyst, this portfolio manager collects that information. Now she's got to take her break to the Hamptons because there's a real catch. There's a guy there she could marry. But maybe she says, you know, and by the way, I've noticed at least many women at work harder while they're at work than many men do. So she's hardworking, and she says, you know what? I'm going to bring this. It's still July. I'm going to bring it before I go on Friday to the Hamptons. I'm going to bring it to our committee, and I want authorization to buy, I don't know, I'm making it up, 2.5 million shares of Railtown. And they quickly approve because she's effective. And so she says to her assistant, Paul, could you know, I know you've done a great job. Thank you, but I'm going to be gone for 3 or 4 weeks. Could you, this order is important to me. I'd like you to submit it with this, and this broker, and just update me. You don't have to call me. You just text me, and just be available when I call to let me know the status of the order. Well, that's all you need. If there's a bid under Railtown for 2 or 3 million shares, even if the manager's at vacation, you just need it in the algorithmic computers and somebody staying behind to babysit it. Or she might be able to do it from her, her porch that overlooks the Atlantic. But in any event, in the United States, I don't think vacation interrupts buying the stock. And Railtown, if an analyst can see that this is the orchestration layer and this is Canada, and they can start modeling the addressable market and just assume Railtown gets part of it, and then if that then applies worldwide and they model it, we've got to own this stock it's got to be one. Remember, they do a portfolio like I'm suggesting you all do. And I'm suggesting we've already done. But we'll do it once we have bigger accounts. They do a portfolio approach. And she's going to put in the recommendation to buy that stock, and she's going to hold it for 5-10 years, unless the story changes, or unless there's a better something to buy. Once that bid comes in there, this grinding peak that you see, they're going to disappear like, I can't think of anything disappearing. They're going to disappear like whatever, like flies. So it'll stop. It'll stop, Pete. And when it stops, it's not going to stop at 23. It's all of a sudden going to be going up. So you'll make it through. Donna says, hey, Jack. How many of the following? Why did you pivot to women in the workforce getting pregnant? Because then they leave the workforce. I'm not judging it, but I am judging that when you come into a training situation, and a training period can take 3, 4, 5, 10 years, and if you have to keep that level or better because you got to put the thumb on the weight to get that higher, Well, then a lot of men, I see it around here. I used to go out drinking, and many bartenders, they're happy, but they're bartending. Well, I was, yeah, my girlfriend, she works over at Skadden Arps, or my wife is a senior so and so at some law firm, and it works. Not always, because not all women stay with the men as they reach higher status, but it works anyway for that time frame. And so the training and the experience is going to women, and that may be all right, but women have a choice. Women have a choice. They have two roles. If you simplify it, they have two roles. They can work, or they can be mothers. Now, the idea is they do both, which I'm not sure they always have a choice, if depending on their economic situation. They can try to do both. And of course, at least 100 years of thought has trained that the family is a patriarchal nightmare, and that it's men are holding us down and we can have it all. Okay, fine. But I'm finding it out in my life. Time doesn't wait. And so if you have young women exchanging their best years for pregnancy, to go to college, to go to graduate school, to get a degree, then to go into an entry or at a middle level, but get training at a firm. If they decide they don't like that work, which happens a lot, they have a choice to leave and get married, or leave and do something else. Society won't judge them that way. They might judge themselves. But a man who follows that path, if he cuts out, the judgment's pretty harsh. The judgment's pretty harsh. If a man brings a girlfriend home and, oh, your son, what do you do, dear? Well, I'm studying to be a writer. Oh, that sounds so lovely. But if a woman brings a man home, what do you do? Well, I'm studying to be a writer. Oh, you got to get away from him. He has no prospects. There's been no adjustment for that. But if you take some of the training, if you take the positions that take a young man or a young woman into the ranks of a successful part of an organization, well, then other people didn't make it. But what happens, and I've seen it, women meet somebody, they marry, and they're good at being mothers. Men are not good at being mothers. I think men are good at being fathers, and they're very good with children. But men can't have children. So it's just a fact. So anyway, when a woman leaves, if you have DEI, which keeps the thumb on the weight, well, we want to see more women, okay, got it. Well, if a lot of women are leaving, you got to keep bringing in young women to keep that percentage. And you're always having low length, small length of service people getting promoted just to meet these ratios. And the odd thing, too, is that a lot of women are not satisfied, and I don't know where it comes from, with marrying someone who hasn't worked hard, who hasn't made it on his own or maybe inherited it, but he's working hard, he's achieving, he makes more money, he's smarter, he has better degrees. Well, those positions aren't endless. So if you're taking those positions, either many women date the same men, or you start dating quote unquote beneath you. And you know what's happening in our society? A lot of women are dating the same men. That's just happening. But the reason I brought it up as it relates, I don't know if it happened in any of these situations in Canada, but I really think that it changes the focus of an organization from production to, working things out. And right now, I don't know your background, but I came out of a life where I always worked hard and I always had to produce. I don't not feel like I'm doing that right now. And that frustration happens. But I saw it. I say it because I saw it. And I saw it a lot. And I'm not saying it's wrong. It just, all that 5 years or that 6 years, 8 years of knowledge just walks out the door. You got to start over. I'm not sure it's the most productive strategy, but I guess it's equal. But what happens to the man that didn't get that opportunity? He's not at that desk learning for 5 or 7 years. He's bartending or digging ditches or whatever, painting houses to make money, biking. And he never raises to the standard that these well-educated, highly compensated women would ever marry. And I don't know, it's a track for a lot of unhappiness in our society. I don't think it's the highest productivity. To me, there's no indication, no one studied it, that if we just put women in charge of everything, just to have them, that's necessarily more productive than putting men in charge. I like merit and I like equality of opportunity, and that whoever does the best, that's fine. But I don't like that you have to fill out preset ratios. I don't think they're doing that in China. And ironically, I've met a lot of women in China. They're very powerful. So it's like it's already kind of built in a bit. Maybe they did it under Mao. Maybe that's why everyone wore uniforms. There was no sexual harassment. They all looked like an olive, circle, oval, nothing exciting. But yeah, I guess I brought it up because I think that Canada is far ahead of us on this socialist path and is far ahead of us in DEI. And I think it really slows down producing. But I've known a lot of women that succeed. My sister's the smartest person I know. She works extraordinarily hard. And, people get things done, but she's an attorney, so her work is measured differently than what we're trying to do here, which is to make money based on companies generating revenue. That's a different kind of work. That's just my only point. If it's not interesting, I apologize. T. Alex, another 15. Wow. And Tenny, if any women are listening, it's not personal. I'm not talking I'm talking just, I don't know, it could just be youth today. Can't have a different view on everything. Whatever it is, things go very slowly in Canada, and I can't explain it. But I think it's worked to our advantage. Wow, 30, you got your 33 cents. Yay, T. Alex. Ricky Brogan, 300 more. Yay. T. Alex, that's for everybody who's at. Everyone counts. Yay. Donna M. Nice, Ricky. See, everybody helps everybody out. Ricky says, thank you, Donna. Here's Neil Gondek. Let's see if he has something good. Neil Gondek says, hi, everyone. Let's keep the faith. Canaccord takes another 15,000. Wow, at 33 cents. NVIDIA referenced 750 billion on projects. Why not a couple billion on Railtown? Share price being held down. Why? I think that's brilliant. Thank you. And I think the possibility is they're trying to move shares from accounts they don't want to blow up to accounts that are going to get blown up. I also think it could be as simple that the computers haven't recognized the risk yet, and they'll just keep grinding until they can't anymore. Wow, it's raining a lot outside. But thank you, Neil. That's great. I think that's great. And they keep the share price down because they think these companies are going to need to raise money. And then by definition, when they go to their buddies and it's a completely massively unfair deal, by definition, unless what's happening that's good is really, really big, by definition, the share price is locked in at a lower price. It's a brilliant scheme. It's a well thought out scheme. Unknown Stuntsman. Hey, Steve, how are you? I'm excited about T. Alex here. New total. 681,000. Good gosh. Good gosh. That's that's bigger than Ward, but not much bigger. That's congratulations. Look, when you're exactly right, when this turns, an institution will buy 700. What'll happen, my opinion, when it turns? Now, if it's just one institution working to add over August, this won't happen. But if a news story came out, let's say, I'm making this up, and I'm not sure this will happen, but let's say it's just a bold statement that Buzz Hive has locked down X financing, and Cohere and NVIDIA Vera chips are in, and in one of the paragraphs, and they've selected Railtown AI Technologies as this. I don't think it'll ever be that bold. I think it'll be something that analysts will have to see. But let's just say it's like that, T. Alex. I think the buying will come in, maybe not in one day. It might take 2 or 3 days to process. But if you have a couple of institutions buying, each trying to buy 5% of the company, each trying to buy 10 million shares. They'll buy, I think what'll happen, they'll come in, they might call somebody, how many shares can you get? Or they'll just have their computer do it. And they'll try it first to outsmart the algorithms and accumulate, like you guys have done. You guys are the smartest institution out there. You've been outsmarting the algorithms for a year. But these guys will come in and they'll buy what they can, but then they'll just start buying. That price will go up. And every time the sell side algorithm gets stung by 50,000, 52.5, that guy, it's bought. Next time he puts it in, it's bought. Next time he puts it in, it's bought. He'll stop putting it out. And so that offer will move up. But then simultaneously, something will click in the computer's, robotic brain, and it'll say, uh-oh, this is out of our parameter. And they might come down on the buy side. So I think you'll see a day where there's 600,000, a million, 2 million shares traded. And that's your sign, at least in the short run, that everything's turned quite rapidly. Steve, when is your interview with Corey? Well, it was supposed to be set up. I've never heard back. I've called several times, two, maybe three. And I presume it'll happen when, my guess, it'll happen on the next PR or the next news release. I've already spoken very kindly. He spent about an hour and a half with me twice, more since December. I wasn't the only person on the call, but it was very, very conference call size. And so I've already had a chance to learn quite a bit. No material, non-public information, none. And in fact, I asked, could I get a copy of that? I said, no, you can't. I'll be glad to share it with you after, whatever it was, after a relevant announcement. But no way. And he didn't share it on the call. There was a diagram, which I've shown you. It's just a diagram about how AI is set up and how it's going and how Railtown fits in. Very generic. But I'm sure he's really busy. And the last thing he needs to do is take time for an interview with me. But also, Steve, if there is something pending, and I would imagine there could be a lot of things pending. Again, I do not think the delay is with Railtown. I think it's with all these, nice special committees. But it'll eventually, things do move through committee. And so I think it'll be when there's some press release or news release. And then I think there'll be a time that I can talk to him. And I would love it if I could have an interview here with him. I don't know. There's one person I'd like to ask to help me. So it's a very polished deal, but I don't know how I will pay her. So I don't know if that'll happen. It might just be kind of my amateur efforts, but I think he'd love to talk to everybody, and he's really smart, and he's a very effective teacher, and so I think people would get a lot of confidence out of him. But I can't emphasize, and people want to pick on me for it, so I won't use quiet period. But he just simply cannot talk. And the safest thing to do is to not talk. I have no idea why he talked to that other I think personally, can I just point out, I think that's a pretender in terms of being supportive. But I don't know. And I don't want to use any names because I think I'm trying to remember who called me out on it. But I think he was right. It doesn't help. So I don't know how he's allocating his time. It's not to me right now. But I'll let you know when it happens. Steve, I have made it over 200,000 shares. That is amazing. That is absolutely brilliant. Bravo. Bravo. That is a huge position. T. Alex, we need a little patience here. RT is working very hard at their time. AI at their time AI. RT is working very hard at their time AI, and I am sure there are a lot more of Telus-like deals being made at the same time. And the government of Canada, I'm sure. I agree. I think they're, T. Alex, I think they have more business than they can say grace over. Jack Hamilton just got back on, had to get back to work. Wow, Alex, congratulations. To Ricky B and Joe Marty and Bob S. and to Steve. This Steve. Different Steve. This is a different Steve. Jack Hamilton. What's happening, Pat M? Hope you're well. Jack Hamilton. Ricky says, thank you. Quit that. There's quit that. I like it when you do these projections. Gets me excited. I'm not making it up, but it is back of the envelope and it is wild ass guessing. But I'm not making up the size of the addressable market, nor am I making up the criticality of the orchestration layer. And these numbers that I'm giving kind of on a global scale, they need first to be proven in Canada. But if Railtown is a premier, I think it's the best, but let's just say it's a premier solution. I think it's going to spread like wildfire. And you're addressing $1 trillion market every year. And for Railtown to get, a few billion of that, it's very small. I don't think you realize how big $1 trillion is. 10% of $1 trillion is 100 billion. I'm suggesting to you that Railtown gets 2.5 billion, 5 billion. That's, that's 5% of 100 billion. 10% of $1 trillion is 100 billion. 5% of 100 billion is 5 billion. What does that make 5 billion of $1 trillion sized market? I don't know. I hesitate to guess, but I'm assuming it's 0.5%. I don't think my calculator goes up that high, but it's in any event, whether it's 5%, 0.5%, it's a very small number that Railtown has to quit that to get those projections. And that's why I feel strongly you shouldn't, if your idea of diversification is to go into these other, not you and not the other guy I was talking about, but just one's idea is to go into a bunch of these other stocks at a diversified scale. It doesn't make sense. Now, if you want to trade, like I've suggested with Total Metals, but the problem is Total Metals was hit with a natural disaster. I think we got lucky because they hadn't spent any of the money they raised yet, but they've been delayed because of Canadian fires. Well, they can't control that. I do want to find out if they have, and I think I will have an interview with those guys, I think. But that's another one that I was expecting somebody to get back to me. They didn't. But anyway, the idea there was just to have a distraction while we wait, never to replace Railtown, and also to know something, know the process, know there'll be other deals, there'll be other opportunities. In my opinion, it's important to get to know a handful, a dozen, 20 different stories, but you can only really focus on my opinion, you can only focus your attention on not that many. And in fact, when you find something that you've done the work on and you truly have an edge, I believe each and every one of you have an edge on Railtown. It's time to really concentrate the position. But anyway, Clay, let's try to do it. I think that space, as every single software, tool, application, what you're using right now to watch me, what you use when you enter in your tickets, what you use when you travel somewhere, what you use when your card is swiped, what you use when you store pictures, what you use when you order on Amazon, every single thing that was SDK has to be replaced with ADK. And it's a big market. I think it's even the subset of the orchestration layer and that software layer there could be $1 trillion a year or more. Now, Railtown, I don't think Railtown claims the entire orchestration layer. Depends on how you define it. I certainly don't think Railtown is going to be the only company doing it. I used to think they were first. I now think they started first, but it's debatable. I still think they're best in class. Million, billion, trillion. Am I doing that right? It's 1,000 billion. And it's 100. Yeah, I think I got it right. So 5% becomes, let me see if my calculator will do it. I don't think it will. 5 billion. That's 5 billion divided by, I just don't think it's going to do it. 1,000 billion. Yeah, it's 0.5%. Quit that. So Railtown just getting 0.5%, and I think the annual spending could be this high. And you go, it's crazy. But what's coming is agentic AI. Instead of me sitting and typing or me talking into a phone, an agent is going to be exercising its instructions, and it's going to be contacting another agent, and these may represent teams of agents, and it's agent to agent. And I believe Railtown's going to be clicking every time as a meter, every time compute or tokens are spent. A lot of this we've got to learn as the blackout on news leaves. But quit that. For Railtown to do 5 billion in annualized revenue, it could be as little as 0.5% of the annual spending. Now, that's, that you may say that I'm way too optimistic. So say the spending is less and it's 1% of the spending, or it's 5% of the spending. It still means that Railtown doesn't have to go out and be a category killer. Unknown, although I think they are. Unknown stuntsman, nice job, T. Alex and RT crew. Ward Richardson. Canadian tech leaders and startup founders are frustrated with government funding bottlenecks, warning that bureaucratic delay is causing Canada to lose its competitive edge. What edge? What edge? But I guess that's my point. And I shouldn't try to define it, but I think if you go woke, you become a slowpoke. Ward Richardson, I see a lot of you all are picking up more cash cows. Congratulations to all. Yes, sir. So let's see what I have to show you. Did I already show you that? I don't know if I did. Maybe I didn't. Yeah, I showed you this. This came from Derek, and I showed you the article. U.S. says it supports Canada's, this might have come from Ward or Derek. U.S. says it supports Canada's sovereign AI goals, wants more partnership. Yeah, right. The U.S. government is generally supportive of countries like Canada pursuing their own sovereign artificial intelligence strategies so long as they become the 51st state, so long as it's not at the expense of the best technology. U.S. Embassy at Ottawa, I see no issue with Canada promoting Canadian companies. The challenge is when that push comes at the expense of the best technology, which I guess is ours. But is it China? Countering Chinese influence, particularly in international governments bodies, so that Beijing isn't in a position to dictate AI use by sovereign nations, is another area of growing cooperation. The AI firms are best suited to identify the needs that consumers really care about and then respond to those needs. Working closely with communities as they pursue large data centers. Well, I guess that's right. You have to do that. I shouldn't make fun of working closely. Trump administration's AI action plan from last July has sought to loosen regulations and speed up permitting for large-scale data centers in the United States, with an overarching goal of fostering widespread AI innovation and adoption while securing American dominance over the technology. It's all about American dominance. AI Minister Evan Solomon said Canada will have to rely in part, and this is the key part of this article, in part on existing American technology as it builds up its sovereign capabilities, while also maintaining partnerships on data security and safety. Sovereignty is not solitude. It doesn't mean we're not building a moat. No country can do that with technology. No country can do that with trade. Our best partner, our biggest partner is the United States. It is, it will be, it remains vitally important. But what's important there, and the whole reason somebody sent me this article, is either Ward or Derek, I think, but the reason I took time to read it to you, highlight it to you, is I think what it points out is how important a conductor cloud, if that's what we can call it, can be, which orchestrates the direction of the electrons, that orchestrates the direction of the tokens. And if you've got a business to do that's sovereign, it stays in Canada. The rest can go down to whatever that Starlink one is called down in Texas. And they can do it instantaneously. And he goes on to say, the actual cost of trying to build everything from zero all the way up and doing it entirely Canadian would be expensive. It would be slow. I don't know if it can be much slower. And it would result in the Canadian AI economy being far behind. So Dr. Tom Core liked this. In Brantford, Ontario, a young man is recovering from an illness conceived. A young man recovering from illness conceived the idea for the telephone in his family's backyard. This province has been changing how human beings connect for 150 years. It's felt like 500 years. But there you go. Proudly Canadian, Hive's Buzz HPC aims to continue the traction of innovation. One quiet idea born here. The next one is forming Hive. He liked Denver, the whole team, Denver without, see how it's clever? You get rid of the E and then it's Denver with an R, but not the E. Anyway, they're all going to a conference. This is, that's that video I showed you of John Ruffalo. And this is the breakdown of some of what he was saying. Matt Cohen wrote, John Ruffalo and I break down one of the messiest and most telling weeks in Canadian tech on the latest Tank Talks rundown show. Touch Bistro's fall from Canadian Darling, Dominion Dynamics Series A, and the Defense Technology Gold Rush. And you don't think Railtown's going to be part of defense in Canada and in maybe the United States, maybe Europe? Meta's $13 billion Alberta data center. Why foreign-owned infrastructure doesn't buy Canada AI sovereignty when the models, chips, and IP are owned elsewhere. But what if, I don't know if Railtown has a role there. The open weight AI movement and whether it quietly erodes the business models of OpenAI, Anthropic, and the rest of the closed frontier. And then Carney's push for Saudi capital and the gap between renewed interest in Canada and committed dollars. And here's our committee at Digital, which we need to get funding. Laura Greiko says, there's serious planning when there's big sheets of paper out and in-person good vibes. Have fun. And then Kim Hockstad says, great team and looks like a very productive day. Well, maybe. Who's to say? All right. Let's go over. So what was this? I can't read it. And for now, for now I want to skip it because it's already 7. So maybe that'll be tomorrow. But we can go here with some of this. This should be pretty quick. Nicola M. Meyer has a list of private equity, and they claim that they have deep sector expertise. I think they're a bunch of dolts. They got more education. But when it comes to investing, everybody's a dolt. We all have our human frailties to deal with. Doesn't matter. When money's on the line, we're all feeble. So who leads in each industry? So they ranked it. I don't know what TMT means. Toma Bravo, Services, Blackstone, Consumer, Rourke Capital, Science and Health, EQT Group, Industrials, Apollo Global Management, Materials and Energy, KKR, Financial Service, Stone Point Capital, Infrastructure, Blackstone. So the points you get out of this, most large investors are generalists. Blackstone appears in all 8 sector rankings, topping 2 of them. KKR appears in 7. Apollo, Bain Capital, and Partners Group appear in 5. TMT, Consumer, and Infrastructure have the most specialist investors, and they list some of them. And then most large investors are headquartered where? In the United States. U.S. firms hold 65% of all the leaderboard spots. 62 of 96, leading in 7 out of 8 sectors. Infrastructure has the least number of U.S. investors, with only 4 in the top 12. The rest are in Australia, Canada, Singapore, Switzerland, France, and the Middle East. Sovereign wealth and pension funds, IFM, Macquarie, I can't read it, Gulf, GIC, CPE, PIF, they're mostly materials, infrastructure, energy, and financial services. So here's the list of the columns, and you can see what she's saying. KKR is well represented, Apollo, Carlyle, Brookfield's down here in 1, BlackRock's all over, Brookfield's in the middle a little higher. But anyway, we don't have to spend a lot of time on it. Dr. Kaur put this: the compute market is about to learn what the real estate market learned centuries ago. I don't know what it learned centuries ago. Asset-backed securities exist for a reason. Oh, mortgages maybe? Carnage in the hyperscaler bond land. Investment-grade bond spreads for hyperscalers are, I didn't put it out, but you can see the chart doesn't look good. I replayed this because it makes it all the more important for a product like Railtowns. And there's other alternatives. ThinkOn, Canada's own cybersecurity agency, just told us what's coming. Is your infrastructure ready? We will have cyber incidents. Bill Blair, Minister of National Defense. Cyber threats in Canada are persistent, widespread, and sophisticated. I don't know why. What threat are you? State-sponsored actors, ransomware, cybercrime. The landscape of this is not stabilizing, it's expanding. So Rajiv Gupta, head of Cyber Center, recommends organizations get there. So anyway, I think it opens opportunities for Railtown, maybe as a white label. Dr. Kaur went on to say, Buzz HPC, insulin, the pacemaker, the theory beyond modern AI, DEI, the theory beyond it. I'm just kidding. But discoveries that change the world, born within blocks of each other on one Toronto campus. Proudly Canadian, Buzz HPC carries that same spirit, accelerating discovery for the region, the country, and for humanity. Toronto, Buzz HPC, a century of breakthroughs, not finished yet. Dr. Tom Kaur, H2O.ai, enabling partners. One of the most effective ways to scale AI adoption. Launched a dedicated partner skill track at H2O.ai at a university, H2O.ai University. So anyway, we got the picture. Stephen Diamond, AI infrastructure is about to be split from the prompt and the answer. AI infrastructure about to split the prompt from the answer. We tend to treat AI inference requests as a single workload, but in reality, every request is actually 2 very distinct compute phrases. Prefill, processing the prompt and building the KV cache. Decode, generating the answer 1 token at a time. Mixing them on the same hardware creates inefficiency because their requirements couldn't be more different. Prefill is compute bound. It scales with context size. attention matrices and rewards massive flops. I should fit in. And high density accelerators. Decode is memory bandwidth bound. It processes sequential tokens where latency and memory bandwidth, GBs per token, dictate cost at scale. Yet today, 90% of AI workloads run both phases on the exact same expensive GPU infrastructure cluster. The model breaking down. Now it's enter disaggregated inference. They keep changing the names. And here's how the next generation AI stack will work. Step one, a massive 128K prompt hits a high density regional compute cluster to execute the prefill phase. Step two, the resulting KV cache, often gigabytes of state, it'll stream over a sub-millisecond ultra-high-speed network. This needs Railtown. Step three, decode runs on an entirely different accelerator optimized strictly for streaming token generation under 20 ms per token. Prompt processing and answer generation no longer need to share the same chip, rack, or even data center. That's where a conductor comes in. We're already seeing the architectural shift. NVIDIA is pushing disaggregated serving via Dynamo. AMD and Cerebus are building, or Caribus, are building heterogeneous inference paths. Specialized ASIC startups are designing chip architecture tailored only for low-end, low-cost token decode. This rewrites the economics of AI infrastructure. The industry is shifting from what's the fastest GPU to what is the cheapest combination of compute, memory, and networking across each phase. That's Railtown, and I think that's why Dr. Kaur put us up. Training taught us to think in static clusters. Inference is forcing us to think in dynamic pipelines. The future AI cloud won't execute your request on one spot. It will dynamically route each phase across the cheapest, fastest infrastructure in real time. And there you go. That's Railtown all day long. I'm not going to bore you with this. Process the prompt, build the cache, decode, generate the answer token by token. Somewhere in all this movement is your company. And I'll leave it up a minute if you want to pause your screen and read it. So I'll just leave it up a little longer so you can do the pausing. And I'm going to take it down in 1, 2, 3. Buzz HPC, he liked. Every AI response you've ever read started with a list of hundreds of thousands of possible next words. The methods that pick from that list have a flaw. Push them toward creativity, and they start treating garbage as valid output. Research at Association for Computational Linguistics 26 just proved it mathematically and proposed 3 replacements. We broke down all 3. Buzz HPC exists to run them the way they were actually designed to perform. Buzz HPC, inference maxing. Could it be that Railtown has a role there? Dr. Tom Kaur, Hive Digital Technologies in Brantford, Ontario, a young man. Okay, we read that already. But the next big idea is forming. All right, now I want to go through NextBridge. And we'll talk about that. and try to relate it to Railtown. But this next bridge, imbroglio, is the perfect explanation for this systemic slaughter of retail equity in these low price stocks. I'm not saying all low price stocks aren't going to work. Remember, you've got to have, I think, three things if you take this kind of financing: a plan to pay it off before it bites, two, a backup source of money. I mean, it's really hard to go take a shot of heroin and not get addicted, but if you have a plan, maybe you can do it. But secondly, and more importantly, something has to happen to your net asset value overnight or to your revenue stream overnight. And then the grinding, the grim reaping is about to come to an end. But the critical thing is, because of those changes, institutions start buying. Institutions have long time frames. They come in and stabilize the bid. They do the work like you guys do. They calculate the value, the projectable value from on high. They don't look at the stock price and use rule of thumbs. They just say, hey, our model shows it's worth $10 to $25. The stock's trading at $1. Let's buy it. It all comes down to institutions buying and not being part of the schema. Okay, so NextBridge Hydrocarbons, and I think Greg McCabe is amazing, announced today, and one of your friends of the audience sent this to me, July 28th, Midland, Texas. The company wishes to reassure shareholders that our transfer agent, Equinity Trust Co., has confirmed for us that all shares from our recently announced special dividend of common stock were successfully distributed within their system on July 22nd, 2026. NextBridge has received numerous requests from shareholders to release data regarding the share totals held by brokerage firms at EQ. In the spirit of transparency and full disclosure, the company provides the following. The table below displays bulk certificate share numbers. This is the street name. Share numbers registered at Equinity by each alphabetically listed brokerage firm on July 8th, 2026. The date of record for our recently completed dividend distribution. Brilliant. And this is the strategy, I think, because we now have these numbers. We have a picture in time. We also wish to acknowledge that based on publicly available information and data from multiple sources, the company is aware this data does not accurately reflect the actual total shares credited to shareholders within several of these firms. I got to tell you, I got to give a big bravo to Greg McCabe. I think he is one of those quiet but effective leaders like Junk Savvy, like Busy Brands, like Robin today, Jack, Danny is 100%, and others. I wish I could have finished my conversation with Danny, but it was unfair to the audience, I guess. That guy knows, he studied it, and the audience wanted to get back to this list that I'm going to show you. So here's alphabetically who owns the bulk certificates, the street name certificates. Start at the top, Apex Clearing Corp. They may work for a bunch of brokerage firms. They have a bulk, the shares are listed at 2.6 million. If you come down to B. Riley, they only have 1,200. You come down to BNP Paribas, 90, but they have three sources. BNY Mellon Management, and Charles Schwab has two different ones. Now, I think that can be that they have two different legacy firms. It can be that Charles Schwab created an ETF. It can be that Charles Schwab has their personal, what is in individual accounts and what is in their house account. It could be that it's retirement. You don't know. It could be different not LLC, but different tax identity. It doesn't really matter. And then CIBC 38,000. I'll see if you come up with the one question I wanted to know. But there you go. With Citadel owns 2,994,000 shares. Desjardins in two accounts, but one's 87,000. Fidelity doesn't have much. So I embarrassed myself. I didn't realize that Fidelity clears through a different name. Fifth Third Bank has 2,500. Goldman Sachs actually has a position. I think Goldman Sachs is in on this sting operation, but it's a guess. Gerlach, 2,921,000. Interactive Brokers, 1 million. There's JP Morgan, Janney Montgomery, Jeffries, JP Morgan down here, a lot of them. Raymond James has some. RBC has 2 million. Robinhood apparently has 11 million, but I was told when I asked that retail's not allowed to buy. So maybe this is left over from institutions. Maybe Robinhood imagine this. Robinhood was created to take some of the pressure off of the scheme. Who knows? TD Ameritrade, Trading 212. That's the group right here that was offering a penny. I asked about that. I'm not sure I understood that they're out of the picture or not. UBS, Virtue has none, virtually none. Wells Fargo. And then you have Morgan Stanley, and they have a bunch of different, that could come from companies they bought. It could be their prime broker. It could be different different ETFs or different pools that they manage. You don't know. They don't break that down. This is where Fidelity sits, National Financial Services. I didn't know that. And then Merrill Lynch has some up there. Merrill Lynch Pierce Fenner, almost 2 million. And the numbers I remember in my head, there was 165 million shares when this thing froze. I think all in, there's now 90 some million shares, maybe 96 at the transfer agent. So there's roughly 60 million shares that people haven't transferred. And I think that's on purpose. I think Double D, as I call him, came on. I think he was paid to do so or promised a bounty. I've heard that. I'm not making that up. But I don't know it. To get people not to move shares, because I think the goal of the whole thing is to move it to trade. And what's amazing to me, the community's amazing, but a lot of what they're finding out is stuff I put in videos 3-4 years ago, and I've talked with you since. A lot of it was projectable because it was logical. And I'm not trying to take credit for it. I'm just saying I said a lot of it in advance. I'm just amazed at how, particularly someone like Junk Savvy processes everything, and then she is fearless about how she analyzes it. I got most of it right away, and I used to do these big examples. For example, one of the big things is it seemed logical to me to set, and I used to draw it on these big charts. The most logical thing was for the company to supply the shares for the criminals to get out of trouble. But I've learned, as with the community, I've learned a lot about how some of the mechanism I knew, but Junk is pointing it out now, and I'm not criticizing her, but it's a risk I pointed out from the start. We sign arbitration agreements to open our accounts. That's why a lot of attorneys don't want to take the case. But I think Busy, and these others, she's done a magnificent job of real deep due diligence, but collecting the whole story. And she's not afraid where the data goes. She's not afraid, even if she's made a mistake, she's not afraid to admit it. She's truly done a remarkable job. If your shares that are held at one of the listed firms and not credited to your account, please contact that firm directly with your inquiries. It is the responsibility of your brokerage firm or financial institution to credit your dividend shares into your individual accounts appropriately. And it's got the forward-looking statements. Everything said here could be wrong, and it describes NetBridge. And one of the powerful things there for me is you now know a number of which we didn't have. So if you're at Fidelity and they're telling you they can't give you shares, you got to go down and look at that company that begins with an N. You can see they got 15 million. You can say, I want those shares. And you can raise stink. Junk pointed out that there's a problem maybe with some of the retirement accounts, but I know you can transfer. There's a company out of Chicago that'll do it. But I think she has an answer now, so I stopped pointing that out. But there are truly self-directed IRA and retirement accounts that you can sign up for, and they can hold NextBridge or Mmtlp, whatever you want to call it. When you open a self-directed account at a brokerage firm, it's really a misnomer. The shares are held at Merrill Lynch, but you can make some decisions, but that's a different meaning. All right. Stephanie put this up. Ken Griffin's new puppet is Byron Donalds. I don't know. I saw him. I kind of liked him, but the amount of money that's available is massive. Byron wants to be governor. Griffin's moved to Florida. That's how it works. 10 million for Ken Griffin is less than a day's earnings. It's theft. Kenny makes $4 billion a year, $15 million a day counterfeiting. It's just trading. It's front running. It's cheating, but it's allowed. And he makes political donations. That's how he buys the government. $10 million to buy Byron Donalds. That's our government. That is our government. I liked Byron Donalds. I really did. But I trust what Stephanie put up. I'm sure she didn't make it up. I'm not sure who Stephanie is, but I trust her. This lifeguard saved a boy 16. Sorry, the lifeguard is 16. He saved a boy 10 I think it was in Hawaii or California. God bless him. He used all his skill and he put himself at risk. That's a hero. There's an example of toxic. That's toxic male right there. So sick of toxic male. And then you go down here and you read about a woman, two different women. One woman killed 3 of her children and her husband standing beside her. Another woman, I'm not laughing, but it's just so horrifying. Another woman killed 3 children. She jumped out of the window and paralyzed herself. But no one worries about the husbands. It's all about, it's just, I just would suggest that all human beings have the capability of doing right and doing wrong. And it's not as simplistic as they try to teach us. Look, tornadoes are going through the Northeast. The climate is changing. And I often wonder, why did civilizations live underground? And as I've studied this, it's scary. You walk in the city and all these buildings with glass, and you just wonder, what if the climate, we've grown up 1,000 years with a calm climate. What if the climate is goes back to having a lot of extra heat and energy in it and 200, 300 mile per hour storms? Anyway, tornado warning issued as powerful storms threaten 20 million in Northeast. We never used to get tornadoes. All right, let's keep going and let's not have me worry about things I can't change. All right, so I put that press release here, and this is the Frenchman. He's very anal, very analytical, quite a bit negativo. But one thing about him, he does adjust his thoughts if he finds something that corrects him. So I like that. And I think I wrote 1 or 2 2 Substack pieces. And it always thinks I'm asking to write another. I'm not. But anyway, comment I asked on synthetic shares. Do you need derivatives to create them? And since the company is no longer publicly traded, are you no longer able to create synthetic shares? And what the hell are synthetic locates? I learned about those. Never knew about that. Who's ever heard of anything? They can't still be trading, can they? Why have some of these companies on the list? Why haven't they just distributed their shares and broken away from the crowd? And of course it says have. I hope the computer figured out what I meant to say. So the computer got this release and the last one, and it's the 1-to-30 ratio of the dividend, and they're not DTCC compatible. So that's why this whole thing has power. First, the table itself consolidated. The raw list has 161 line items with heavy duplicate firm names, Schwab 3 times, NFS, which is Fidelity, Morgan Stanley. So it might not be unduplicated. I don't think the Frenchman here knows. I think it's different categories. It's different, ultimately, it's different entities, different tax reporting entities. So anyway, you've got total registered of 87 in the bulk certificates of 87 million, almost 88 million. The top 4 are Schwab, Fidelity, Robinhood, and Morgan Stanley. And I was told on the call that Robinhood actually, I don't know, the evidence is here, Robinhood. So these bulk certificates, which stand for 88 million shares, they only received 3 million shares of the dividend. But the question, so that kind of matches up. It does. It's probably exact. But the question is, why haven't they distributed them yet to their investors? Is it possible that a Fidelity at 16 million has a couple of hundred million in their accounts or more? So on synthetics without derivatives, you're right that there's no live derivative, and wrong that you need one. This Frenchman, if I ever meet him in a blinded alley, I'm going to take him and I'm going to make him listen to Taylor Swift. All right. The mechanism isn't a swap or an option. And see, remember, we've learned this. For some reason, people don't adopt it, but it's the UCC Article 8. And you know, we went through, and that's a good thing about him, the Frenchman. He remembers other question periods. The UCC Article 8, what sits in a brokerage account is a security entitlement. It's a contractual claim against the intermediary. It's not a share. That happened under Bill Clinton, whether or not he knew what was going on as he was getting his cigar wet. It obliges the broker to maintain financial assets corresponding to all entitlements that it has created. But nothing in the plumbing prevents the brokerage firm, from creating a credit it can't back. The obligation is a duty, not a constraint. So you can lend it out pell-mell. So the synthetics, if they exist, were not manufactured last week. I never implied they were. They were created while Mmtlp traded exactly. And so the fails to deliver bona fide market making sales under Reg Show, if such a thing exists, X clearing arrangements, CNS shortfalls, all of it, the synthetics were then frozen in amber by the U3 halt on December 9, 2022 before settlement. That's exactly my question. Here's the part worth writing. See, I'm not writing anything. The halt and the DTC ineligibility did not extinguish anything. Exactly. They removed every mechanism by which the imbalance could ever close. Reg Show 204 closeout requires purchase or borrow. FINRA 11.8.10 buy-in requires a market. There is no market, no borrow, no quote, no cash in lieu price, no lying. A fail that cannot be closed doesn't age out, it becomes permanent. And it sits on a broker's books as an unreconcilable position with no regulatory venue to adjudicate it. Exactly. So my question was a little bit different, but this is a good answer. And a stock dividend on that security scales the gap rather than resolving it. If a firm is registered for X at EQ, but is issued Y greater than X entitlements, in other words, they have more stock in their system, EQ credits the bulk certificate X over 30, while the company, the brokerage firm, owes its own clients Y over 30. the absolute shortfall grows. Yeah, we know that. That is why, quote, no formal corporate action matters. There's no DTC allocation machinery, no standard reconciliation, no cash in lieu escape. So every firm allocates from its own certificate, and any divergence surfaces directly on customer statements, but nothing's happened yet. So my question is more, they can't create the synthetic shares. They could do it before. So technically, in this legal netherworld, they were fulfilling their obligations. I think it's all criminal, but no one was enforcing it. But now they can't create a synthetic share. So they're out there naked, as they say in Texas. And to me, that means they need a human being to issue shares, which is a clear violation of securities law if they issue it when they don't have it. Synthetic locates, I asked about. The term is loose retail shorthand. Well, my audience does not like loose retail shorthand. If it's not a quiet period, we want to know it. We want to know what it actually is. So we don't like loose retail shorthand. I tighten it before publishing. I'm not publishing anything. The defensible version is non bona fide locates. In other words, cheating. Under Rule 203B1, stale, easy to borrow lists, the same inventory located to multiple borrowers, locates written against rehypothecated customer margin shares subject to competing claims. There's a real enforcement precedent on deficit locate and order marking practices. Ground it there rather than in the phrase itself. All right. Can it still be trading? Not publicly. No exchange, no OTC quotation, no DTC eligible. But absence of a public market is not absence of cheating. It is not absence of position movement. Intra-broker book transfers, ACATs, estate transfers, and negotiated private transfers all move positions without ever touching equinity. What is gone is price discovery. That's been gone a long time, son. And observable transaction data, that's missing too. Precisely the environment where entitlement discrepancies persist unnoticed. 2 line items worth a phone call. TD Prime Services stock loan, I saw that 10,000. And Morgan Stanley Conduit, I saw that 70. They stood out to me too. Stock loan conduit accounts registered at the transfer agent of a security that supposedly cannot be lent. Exactly. Not proof of anything, definitely a threat. I think it's enough proof. Conduit, it's clear what they're doing. But anyway, or may be doing. On distribute and break away, the logic is clean. Ordinary trading never forces the registry and the entitlement ledger to be compared against each other. A distribution to holders of record does. The transfer agent pays on registered position. The broker must allocate on entitlements, and any gap has to show up somewhere. Non-transferability is what makes it bite. A short position in a security that cannot be bought, borrowed, or lied about has no covering path. Overstock's 219 digital dividend was the same structural play, explicitly framed that way at the time. And even he got out of the game. This release gives you one side of the ledger. This is the news release. It does not contain what any firm actually credited to customers. That's true, but as far as I know from anecdotal evidence, they haven't credited anything to customers yet. The gap is asserted by the company, not, see, this is why this Frenchman is so annoying, just like an attorney. But it's true. You can't really know. They're hiding it. It's criminal. I'm not going to read the rest. It's telling me to become a Frenchman, and I'm not a Frenchman. Yeah, I asked what's Fidelity? So National Financial Services is Fidelity's clearing broker-dealer. NFS isn't only Fidelity Retail. It's also a large correspondent clearing firm with other broker-dealers. Okay. So that actually means Fidelity probably has fewer shares. Apex Clearing and Pershing, and they may have other brokerage. So let's not get buried in it. So if prior to the halt shares were expanded into fails to delivers and reg show exemptions, etc., but were done so with synthetic shares and therefore derivatives, technically probably no violations, no human knew. After the halt, the synthetics melt away. Then there would be so-called naked positions. Now, with the dividend, a human has to approve the allocation of unsynthetic shares. It could be a violation to credit these non-existent shares. Of course, my typing is terrible. Your instinct is right, but you're full of baloney. But your pivot is off by one step. And you're skipping the strongest part of your case. See, sometimes he helps me out. Phase 1, pre-halt, no human knew, is not the shield you're treating it as. You're correct that much of it was genuinely lawful. Bona fide market making under 203B2 III lets market makers sell short without a locate. Fails to deliver inside the Rule 204 window aren't violations. Rehypothecation under Reg T and 15C3-3 legitimately makes one share appear in multiple places. Swell. Conversions, reversals, and options hedging all expand apparent supply lawfully. But the scienter, that's a legal term which I have in my past known what it meant, framing conflates two different liability regimes. Fraud liability, that's 10B-59A, needs intent. Reg show doesn't. Rule 203B1 locate failures, Rule 200G order making errors, and Rule 204 closeout breaches are all strict liability. So is 15C3-3. Firms get fined for these constantly without anyone alleging they knew. And the quote, system did it, unquote, is affirmatively bad for the firm, not exculpatory. Rule 15C3-5 and FINRA 3110 impose a duty to have systems that prevent this. An automated process generating violative positions is a supervisory violation stacked on top of the underlying one. Now you get to phase 2, post-halt. This is where you're underselling your own case. To say the hedge melts away, not the synthetics melt away. What dissolved at the halt was the cover. The option chains delisted, hedges expire, borrows unwound. What did not dissolve is the entitlement sitting on the customer's statement. Exactly. The naked position wasn't created by the halt. It was revealed by it. Exactly. Right here. Right here. Now, the underrated point to the Frenchman, I got it. From the moment a firm holds fewer NextBridge shares than it has, okay, go on, go on, go on. It has credited, it is in continuous violation of Rule 15C3-3, the possession or control requirement for fully paid and excess margin customer securities. 15C3-3D requires prompt steps to reduce to possession or control. Impossibility does not cure it. I love it. Impossibility does not cure it. There's no market to buy in, so the firm cannot come into compliance, and it stays out of compliance every single day. There's also a 15C3-1 net capital charge implication for the deficit. I think we have a 15C3-1 problem. Have you ever hung out with attorneys when you've hired them? Greg, I think we have a Rule 15C3-3 problem. Fascinating. That is a strict liability, ongoing, provable from two ledgers violation that has allegedly been running since December 2022 and requires zero showing of intent. It is a clearer story than the dividend. Phase 3, the dividend. You're right that something changes, but it's not the violation. It's the evidentiary posture. What the 1 to 30 does is convert a passive continuing condition into a dated, documented, human-approved affirmative act. Because there's no DTC corporate action, no automated allocation runs, someone at each firm receives an exact number from Equinity, compares it to an exact entitlement count, and decides how to allocate. Every element of that is timestamped and attributable. Crediting shares a firm knows it didn't receive would implicate Section 17A1 and Rule 17A3 books and records, aggravate the 15C3-3 condition, and because customer statements represent ownership, potentially reach 10B5, since now there's a knowing misrepresentation to the customer rather than a legacy accounting artifact. McCabe's July 17 statement is doing precisely this work, and it's the most sophisticated thing in either release. By saying on the reconciliation, no firm would knowingly credit illegitimate shares, and doing so would breach securities law. He puts everybody on notice. Exactly. The dividend doesn't create the violation, it timestamps it. Anyway, it's almost 8 o'clock. I'm going to leave it there. We can talk more about that tomorrow. I've got to make 1 or 2 phone calls, and I don't have to hard stop at 8, but I pretty much should stop at 8. So let me quickly see. There was only one more comment. Justin Babish, if it's not too much trouble, would you please look at the finger press release about upcoming shareholder vote to convert debt to shares? Look, I wrote a Substack piece to put out on Finger when it was $1 range. I didn't do it because Ham called me an effing idiot. And I didn't, frankly, I had no motive to get in a pissing match with him. And I also didn't want to hurt shareholders. So I left it unpublished. But in that, and I might still publish it after the fact, but one of the things that the documents predicted is a shareholder vote. And before I read it, Justin, and I will read it, it's a fair question. What I remember is in order for this Wieldco, a guy that used to be at the SEC, and I'm sure a guy that it would be impolite to point out that might be comfortable with some of these other guys doing this. I know there's bickering and arguing and not everybody trusts each other, but just that general sense that I'm among people I understand, it might help him. I don't know. I look for patterns. I don't look to be racist or what's the other word? What is it when you go against a religion? I'm not trying to do that, but it is patterns in this behavior that are unmistakable. But anyway, what I remember, Justin, is the reason there was going to be a shareholder vote is to reduce that so-called fixed conversion price, to reduce it. And so the piece I would have published, but I am admitting I decided not to because I didn't want to hurt Ham and shareholders, the ones I met, predicted this vote. Let's see if it's the same thing. It's just reading the document. Because the fixed price couldn't be changed without shareholder vote. The other time is every 6 months it can be changed. So there's nothing fixed about it. But it was pitched to you on conference calls that it was fixed. I don't know if that's just, a mistake, not having read it. I don't see this release. Well, let me go to press releases. I don't see it. Where can I find it? Maybe on OTC Markets. There. I don't see this. Where can I find it? Maybe at their website? It could be at their website. All right, so let me mobile data specialist. I don't want to read all that. So investor relations, press release. Let's see what it says. Coming soon. All right. News. I don't see it, Justin. I don't see the news, but let me think of how I can find it for you. Let me take a risk here because I think I'll lose a lot of messages, Justin, but let me find what I was going to publish and see if I can highlight that vote. I might lose you. I don't like doing this, but I don't have a huge computer setup. So I work at a little bit of a handicap, but my attitude is press on, press on, press on. And adapt. And go ahead and do it. Even though, come on and do it. Do it. Do it till you're satisfied. Come on and do it. Do it. Do it till you're satisfied. Well, I don't see it. That is a different one. All right, let me see if I can find it a different way. I understand just how you feel. All right. Trying to find it. Okay, let me look one more place. No, that's not it. Let's look there. I can't find it. So let me come back to you, Justin, if I haven't. I can't even find how to come. This is the problem with doing this. Oh. I just thought of another way to look for it. I can look on the SEC. All right, Justin, I'm going to look on SEC filings. It might be there. I just thought of that. I couldn't find what I was looking for. All my life, I've been unable to find what I was looking for. So instead, I do this. All right, July 28th. Okay, here's a proxy. Let's read what it says. It's hard to read. So let me take this off and turn it sideways. All right, Justin, if you're still there. They filed a Schedule 14A proxy. And remember, in my read and what I wrote, I predicted, I just didn't publish it. So I'm not surprised this vote is coming. But let's see what it says. Dear shareholder, A special meeting of stockholders will be held in Vancouver, British Columbia, October 6th. Hey, we could go there. It'll take 5 minutes, but we could go there and we could also maybe go visit Railtown. Yep, there it is. That was the thing in the contract. Unbelievable. I'll try to find out who it is, but I think it's Anson Fund, but it'll be hidden. And so I don't know. At special meeting, stockholders will be asked to, one, approve for purpose of NASDAQ listing rule 5635D, the issuance, which wasn't supposed to happen, of 19.99% or more of the company's outstanding shares of common stock to a certain institutional investor upon conversion of a $5 million senior secured convertible note. Transact any other business. Martin Shen, Yu Han Lee, Yu Po Leong, Sin Lun Wong, Ang Ho Ng, Tuk Sen Lo, Yang Yi Cho, Li Li, Taryn S. Pizer, a notorious short seller, and then Dorado Goose LLC. Here it is, the Alto Opportunity Master Fund in Connecticut. Okay, background. May 13, 26, the company entered into a securities purchase agreement with an institutional investor unnamed, pursuant to which the company issued to the investor a senior secured convertible note with an original principal amount of $5 million. And they gave an original issue discount of $700,000. So Wydell made $700,000 right away. The note bears no interest except upon default or unless you prepay it as well. And it matures in a year. So the company signed up for an owing of $5 million. They received $3.3 million. And another $1 million on the SEC declaring effective a resale registration statement on the number of shares that these guys can glom onto. The note is convertible at any time at the investor's option. That's maybe the toad. Into shares of the company's common stock. Issue upon conversion at the initial fixed conversion of 94 cents a share. All right, it's coming back to me. The stock was trading about $1.05 at a 90% discount. That was it. And that's the so-called fixed. except if they ask shareholders to reduce it. That's what's happening here. So that's the fixed conversion price, which on conference calls, hey, it's fixed. It's 94 cents a share. That's different. Well, it's misleading. And maybe not intentionally misleading. Maybe it comes from not reading the misleading. Each monthly period specified in the note, a monthly redemption conversion period, the fund, let's assume it's the toad. The toad may convert up to $1 million in aggregate principal amount of the note, plus all accrued and unpaid amounts thereon. So let's start again. The note is convertible at any time at the toad's option into shares of the company's common stock, anytime. And the shares are issuable upon conversion at the initial fixed price adjustment of 94 cents. That's what was parroted to you, that it's fixed. And that's why I got in trouble when I came on and said BS, because I'm an effing idiot. That's called the fixed conversion price, which is subject to adjustment for normal things. But you're going to find out how it's subject again. So in addition, during each monthly period specified in the note, so I don't know if that starts right away. I'd have to go pull up the note, which I don't feel like doing. I didn't print it out. The investor may convert up to $1 million in aggregate principal amount of the note, plus all accrued and unpaid amounts thereon, at a redemption conversion price. Now listen to this. The redemption conversion price is the lower of the fixed conversion price, which is 94 cents. But it says then in effect. So right now, what's in effect is 94 cents. And two, 90% of the lowest daily volume weighted average price in the stock during the 7 consecutive trading days ending on or, no, not or, and including the applicable date of conversion or the first trading day of the applicable monthly redemption conversion period, in each case subject to a floor. And this is where their trouble is. The floor price initially set at 20% of the NASDAQ minimum price as defined in NASDAQ listing rules 5635 on the trading day prior to the date of purchase agreement, which resets automatically every 6 months. Resets automatically every 6 months. I wrote about that. I didn't publish it. If the company is unable to issue conversion shares due to the exchange cap described below, or if a floor price condition exists, a floor price, the investor may require the toad may require the company to satisfy the applicable monthly conversion amount in cash. And by definition, the company doesn't have any cash, at a 7.5% premium for 1 month. On top of that, any monies raised in this document, a third of it has to go to Wydell. He's a swell guy. They've got a bunch of defaults. In event of default, I'm not going to read through them all. There's a lot. The toad may ask, the note becomes due and payable, and it's payable in an amount of 125% of all outstanding principal amount. They didn't get all the money, accrued and interest. And then it accrues at 12% annually. They have different conversion, redemption, and put mechanics. Not gonna, I went through them all, but here comes the part. The company has agreed to seek stockholder approval for the issuance of the conversion shares in excess of 19.99%. What I remember is the company can't go past that NASDAQ rule. And so they gave this loan, and the company, that's what I remember, Justin. The company can't get that extra $1 million without getting your shareholder approval to increase the number of shares at the date. So absent such approval, the company may not issue conversion shares in excess of 12,256,000 shares in aggregate. So if they're prohibited from doing that, then it becomes convertible into cash by the toad's opinion. So the company had entered into a registered rights agreement. This is where they put stock at the transfer agent that the toad can just come get. So they filed a resale registration statement for 200% of the maximum number of conversion shares. So they're going to get their shares and cover their short. So the reason for seeking this stockholder approval, NASDAQ Stock Market Listing Rule 5635D requires that an issuer obtain stockholder approval prior to certain issuances of common stock or securities issuable at lower than the minimum price as defined in NASDAQ Rule 563D, or if such an issuance equals 20% or more of the common stock. So that fixed amount that was parroted to you gets changed, and it was in the agreement. The whole thing's about disclosure. Depends on who you're listening to or what you're reading, but it was in the document. They were going to seek shareholder approval, and that's the part I'm not surprised about. So the minimum price means a price that's lower of the NASDAQ official closing price immediately preceding the signing of this binding agreement. Or secondly, the average NASDAQ official closing price of the common stock as reflected on NASDAQ for the 5 trading days immediately preceding the signing of this binding agreement. The minimum price for purposes of the note was 81 cents. The conversion of the note could result in issuance to the toad of shares of common stock in an aggregate number exceeding the exchange cap at a price below the minimum price. Thereby requiring approval under NASDAQ Rule 5635D. And that's what you're doing. The effect of the approval is the issuance of additional shares will not affect the rights of the company's existing shareholders, which are virtually non-existent. But such issuances will have a dilutive effect on the company's existing stockholders and your voting power. Swell. Remember, I should have published, but I really didn't want to interfere with the investors and with him. And I already got such blowback. If it's not approved, the company will not issue the conversion shares in excess of the exchange cap. But the company may be subject to higher cash payment obligations. The Toad may require at the investor's election, the Toad's election, by written notice, the Toad may require the company to redeem a portion of the outstanding value per monthly redemption conversion period in cash payments equal to the sum of the monthly redemption conversion plus 7.5% payment premium in respect to each payment of the monthly redemption conversion amount. It would be made in cash by no later than the last trading date of the applicable monthly redemption period. Justin, it's almost 8:30 now, and I've really got to make one call. I will promise to have a breakdown of the alternatives, but bottom line, you as a shareholder, I'm no longer a shareholder, but I lost everything in Fingers, so I don't think I would have anything more to lose. It's not a good place to be. Basically, the document was signed, and in the document is they need to issue these extra shares free to trade at the transfer agent, but it's in violation of this strict number unless they get shareholder approval. It's in the document that they signed and released, and that they said they will get that shareholder approval. So they're getting it. It's the first step of tightening the noose around shareholders' neck. So they'll go to 200% coverage. And then in 6 months, that 81 cents will drop probably to, if I remember, it's 30 cents or 20 cents. Is just the long slide of a bunch of attorneys manipulating the rules, violating the intent of securities laws, but papering it up. So the attorneys make money, the Weidells make money, the Toad makes money, and you get wiped out. Finger Motion is not a stock to own in this situation. You can still transfer 1 share of Finger Motion for 1 share of Railtown, and I would suggest doing it as quickly as possible. But I thank everybody for signing in. I've got to go, and Justin, I'll do better with that tomorrow. Pray for peace. It looks like maybe it is turning into peaceful, and we'll catch you on the flip side.